Very good morning. Happy Friday, everybody. Welcome to Trade Live with IG. Friday, the 13th, and it's unlucky for me because look who I've got sitting beside me. How are you? Look,
I'm very well, thank you. Very happy to be here.
Oh.
It feels like I haven't co-hosted with you in a long time.
It has been a while actually. And in fact, that was the time that you saved me. You came in at the start and you came in back at the end. I think that's the last time we did it. And that's about 6 weeks ago.
6 weeks ago. I've been doing with Angeline in the meantime.
Good stuff. And almost hit by the Pete Ward's train shocker this morning as well. But you're the professional. You made it in on time.
Just about. So my tube was delayed half an hour. So I had to walk for a bit, get a bus, do a bit of prep, look at what's happened in the markets last night, and now I'm here.
Well, look at that. You know, some people can make it in on time. Good morning, Pete Ward. How are you doing?
He's on the late shift today. He's on the late shift, Pete, is today.
He's on the late shift on
a
a Friday. Imagine that. Surprise, surprise.
Lucky guy.
Now, good morning to you all as well. Monkey Man's with us. Gavin Ackers, our dream team. Carl Wolf, Dave G, good morning to you. And Julian up there as well. So, it's showtime indeed. We've got some very interesting things that happened yesterday. We've, of course, got ECB to go through, Swiss National Bank. We've got Broadcom figures. We've got, Christine Lagarde we have to speak about in particular.
Got Costco as well.
And Costco as well, exactly.
And we can talk a bit about Palantir.
We're going to chat about Palantir.
Yeah.
And we're going to talk about MicroStrategy. Oh my goodness.
Right, let's go.
What else have we got coming up on today's show? Well, at 8:45, trade expectations is going to be the one, the only Chris Beecham. And at 9:30, the deliberate mistake there from producer Fred that nobody has noticed until we pointed it out. Market measures exploring market tops. So, yes, we are looking at a deep dive into market tops. Not that we're suggesting that it could be one, but we're looking at what happens to vol and what are the options there. So, yeah, some very interesting stuff to get into. Let's go into overnight action.
Let's go.
Right, so we got some exciting stuff there. Where would you like to start, young Padwan?
Padwan. Right, let's start with Broadcom. So I've got the beer.
You obviously have you watched Star Wars? Are you too young for that?
I've watched Star Wars a little bit. So I'm no expert. I'll be honest, I don't know what Padwan means. I assume it's a good thing.
It is, exactly. It's a good one. It's a good thing, of course. But you know, I'm going to stop short of I am your father, young Skywalker. But
I get that one.
You get that one. Yeah. Okay, good. Right. So yeah, where would you like to start?
Cool. Let's start with Broadcom. I've got the BFW here, so I'm just going to read off the key points. So Broadcom gains as results show strong AI growth, which is the headline. Now, Broadcom shares was up as much as 11% in extended trading after chipmaker reported fourth quarter results that beat expectations on key markets. It also said that AI revenue grew 220% from the year ago and gave an outlook. The stock is up more than 60% this year, and the main upside was from AI.
Exactly. And especially in that conference call when they came out and talked about developing custom AI chips for 3 hyperscale cloud customers. So let us know if this is one that you own, Broadcom. It's a really interesting one. On the platform, of course, it's not all sessions. Now, I know, Coops, you are in charge of deciding what goes on all sessions or not. What are you doing? Why is Broadcom not on there?
Whoa. So the shares desk decide which stocks are all sessions, and they review this once every quarter. At this current moment in time, we have just over 100 all session stocks on the platform. Around 6 months ago, it was just under 80. So we are always looking to improve our offering.
Another 20 added.
Yeah. So what this means on leverage, you can trade stocks out of hours, so pre-market from 9 up until the post-market closing at 1, whereas the main session for the US is 2:30 to 9 o'clock. Now, what a lot of clients don't know is if a stock...
Is this breaking news?
It's not breaking news. However, as I work on the premium team, my client facing, I always like to ensure that clients know that they can actually still get in the pre-market, even though it's not all sessions on the platform. What you can do is you can call in and we can put in a limit order over the phone. So if you really do want to get in or out of a position, then we can actually do that on the phone for you.
Yeah. So, for instance, if you wanted to trade Broadcom this morning at 11 a.m., then you can phone up and you can put an order in the book somewhere and it goes straight onto the book and it sits on the book, because I have done it on Freeport McMorran before. So good stuff. So, right, that is...
And Broadcom, Shares Desk are potentially looking at getting added very, very soon.
It's a potential. It should be on
sure,
there.
it should 100% be on there, particularly with the tech wave we've had lately. And I can see Broadcom share price in the future just going further and further on the upside.
Well, I mean, that's certainly a good set of results. And of course, they were up 8% on Wednesday.
Apple was working on the AI chip together. Yeah,
that's right.
Yeah, I saw that.
Yeah,
very impressive. I mean, Broadcom, they also work with a number of other large companies such as Apple, Meta, and Alphabet. And at the end of October, the ChatGPT creator began tapping Broadcom to design an in-house chip, which it will use for AI. So yeah, the future is looking very bright for Broadcom.
Right, let's have a quick look at overnight markets over in Asia then. So the Aussie stocks declined on Friday. That was despite obviously the big IPO that was going on down there. Miners leading losses. That's because China was particularly weak. China down 2%. They promised more debt. They promised lower rates. So Chinese bonds falling to new lows, as did the currency there. But the market down 2% in China. The only, I think it was only the Kospi. Yeah, Kospi up 0.5% overnight is the only market in Asia that is trading higher. So we got the story there on China bond yields. So Beijing vowing vigorous effort to boost consumption, but it did fall short of really giving too many more details on what they were planning to do. So increasing China's fiscal deficit, issuing more ultra-long special bonds, and this was, of course, coming out of the Central Economic Work Conference. But yeah, lowering interest rates and reduce at an appropriate time. And of course, that reserve ratio as well. But it just, it wasn't enough. So I do fear that we're going to see a pullback in the big China proxies in Europe today. I say unfortunate because, that's I've still got some of those on my book. I chopped some of them yesterday, but the one that has come good now is being short the renminbi. So you can see there on the book, dollar renminbi, got that slightly going to work there. But yeah, I'm going to get hurt in Rios, I'm going to get hurt in Pru's, and possibly Mercedes-Benz as well. So that's something to look forward to, isn't it? Let's see how those futures are looking. Week in the US yesterday gave up some of the gains that we saw on Wednesday. So it's a bit of a weird day, actually. Of course, we started the day yesterday up at 6,090. We gave up 40 points yesterday, a small bounce overnight. Tech obviously higher on Broadcom. Gold also gave up the gains, dropping back below 2,700. Oil slightly below $70. But yeah, copper is the loser there. 432 when we came in yesterday, young Padawan.
Question for you, Rich.
Yes.
Now, obviously, we can see the VIX there at 15.85 at 16.01.
Yes, yeah.
And we've got Trump coming in on the 20th of Jan. Where can you see the VIX going?
Well, have you been reading my mind this morning? Literally, I looked at that last night and I decided to put on this trade. So it's a January expiry, which is the 22nd of January for the VIX.
Yeah.
So buying the 18 calls.
Okay.
Selling the same number of 28 calls.
Yeah.
So you've got VIX going up to 28, right? Which is It hasn't been there for a while.
Unlikely, yeah.
Since August. Well, then I'm not sure you can say unlikely.
No?
Well, no. Okay, you can. And then short the 14 puts to pay for it. So I paid 1.4, but then you receive almost 83. So I'm in, what feels like a protection trade to me for 0.6. So my break even is 18.6 odd. And then I've got 9.4 of upside there on the Volti. So I've done that $400
nice.
A point there. And just happy to have that as a bit of protection, as you say, because that, as you point out, it's going to run into Christmas. We got a lot of holidays and
of course,
people taking the time off. But January, we're going to come back.
Too right.
And we're going to come back, and people are going to look at, right, if I'm invested in US equities, what's my upside? What's my 12 months? Everybody in December, you just want your year-end P&L to look good.
Because in the US, particularly on the equity front and the tech side, we have had such a good year, the whole of 2024. And in 2023, analysts weren't projecting that. They weren't projecting that. And to everyone's surprise, 2024 has been such a good year for the US, like marching ahead of Europe.
Yeah. Oh, and strides ahead of the FTSE for certain. Now, what is the reason for that? Well, the reason for that is woeful economic growth in the Eurozone and here in the UK as well, which we've seen further demonstration of this morning. We've got the balance of trade dropping to quite scary levels, actually. So German exports lower than expected, a 3-year low of $124 billion in October. And you can see that balance of trade there, 13.4 versus 16 expected. And that is exactly why Christine Lagarde saying yesterday that risks are to the downside for Eurozone growth. So there was one comment yesterday that really frustrated me, Mini Cooper.
Go on, what was it?
Christine Lagarde comes out and says, we are not declaring victory yet.
What victory?
What victory is going on in the Eurozone? Okay, you might
France, Germany. I mean, Germany's the biggest economy in Europe. France is also one of the biggest economies in Europe. They're not exactly doing great, are they?
Mercedes talking about cutting 20,000 jobs. Bosch, 10,000 jobs. Volkswagen, 10,000 jobs.
Yeah.
But you're declaring victory, Christine Lagarde.
So, like with Volkswagen, as an example, when Trump got in on November the 5th, shortly after, he obviously announced that he's going to increase tariffs. Now, Volkswagen have quite a big setup in Mexico, and the Volkswagen have a lot of workers in Mexico to export cars to the US because it's cheaper labour and it's close by, of course. So they really suffered from that. And then in addition, you've got, as an example, BMW struggling because in that same month, in November, China basically announced that they were going to put tariffs on Europe, and that would significantly impact German car sales there.
This is it.
And the Germans are known for their cars.
And this is what we're facing. We don't have any leadership in Germany. We don't have any leadership in France. It's a stalemate. But yet Christine Lagarde has the disrespect to talk about victory because they've got price stability, inflation falling to 1.9%, while the rest of the world economies are so strong that it's still above 3%.
I was doing some reading this morning on that, actually, and
was that on the way in on the train? Was it?
No,
or was it in the pub last night?
No, I was only out to around 9:30, 10 last night. It was my colleague's left terrace. It was his 30th birthday yesterday, so happy 30th birthday for yesterday, Lefty.
Happy 40th, Lefty. Good work.
So in January and March, there's expected to be a 25 basis point cut in Europe.
Yeah, another one. Yeah. So that took the euro down lower. Euro dropping to 104.60 on the day. So that was a 3-month low on the euro. But we can't really talk about data that you bouncing 3.7, and also GDP month on month dropping negative. It was to be expected up to 0.1, so that also a big move in here. So drop off straight away, and you can see it there down. So not looking great there. Up
around a week and a half ago, we saw cable just above 1.25, and then it bounced back up to around 1.27, and now we're back where we are.
There we go. There's your chart. Exactly what you're talking about there, Mini Cooper, and that's a horrible drop since 10 a.m. yesterday. Right, so everybody that is, got all their cash in sterling in this country, it's always worth not just hedging your stock positions, not just hedging commodities, but also thinking, right, all my savings are in sterling. Correct. So what do I do to...
And one other thing to mention is we get a lot of clients ask this on the phone. So as an example, let's say you've got GBP, you've got sterling, and you invest in a US share such as Amazon, Tesla, Nvidia. Now, you're converting from pounds to dollars, and then when you sell the position, you'll be converting back from dollars to pounds. So one thing to keep in mind always is when trading in a currency which isn't GBP, then just bear in mind that the exchange rate fluctuations will also impact the money that you make on that position, unless you have a currency hedge in place, of course.
It's interesting because it's you think about putting a position on, and only from working in the industry do I realise how important it is.
Yeah,
we had an unhedged Russian trade on in 2014, and it was over Christmas, so it was from the I think we put it on maybe the 28th, and then we came back on the 4th of January, or maybe it was pre-Christmas and post-Christmas, and there had been a 6% move in the ruble.
Okay, so that's a lot.
So we had a $400,000 swing in the P&L, and it was positive.
Oh, that's okay then. I thought you were going to say it's negative.
Absolutely unbelievable. Rich Collins, Danny Kay, if you remember that was a very special moment in that Danny and I looked at Rich and, which way, is it profit or is it loss? And it was...
With the build-up, I thought you were going to say it was a loss.
Well, we had our fair share of those as well. I think my worst loss was a €250,000, and that was on a mistake.
And how did you celebrate the ruble gain?
Well, you can't celebrate a mistake. Oh. That's the problem, right? You've
always got to have a reason to celebrate.
Well, it must have been January, because then it was in the following year's P&L.
Right. Okay.
So it got us off to a good start in January. Right. What else do we have to go through then? The Sorcerer's Apprentice.
We have Costco.
We do have Costco.
So I've got a BFW on Costco as well.
Are you going to read that one out as well?
Of course I am.
So let's see if you can look in the camera while doing it.
Okay, this is a challenge. So Costco 1Q sales profit jump boosted by rising fees, and it's an e-commerce update. So Costco wholesale posted higher sales in its latest quarter, where it saw a split customer base willing to pay the highest and lowest prices. The company on Thursday reported a 7.5% increase in sales for its fiscal first quarter ending November the 24th. Revenue from membership fees rose nearly 8%, while e-commerce sales rose 13%, the retailer said. Now, I also did some research on this yesterday, and Costco has basically increased membership fees because in the US you have to pay a membership fee. Okay, and a lot of the clients in the past year or so have showed their loyalty to Costco, and it really shows that they've got loyal customers, and it's really good for their future. In addition to that, I also noticed how they have 7 stores in China, so they are expanding. They're not
Costco's in China, is it?
So they're not just based in the US.
Wow.
And China is a growing market, of course.
Good. That's my fact of the day that I've learned there. Thank you. Costco in China. Right, who else do we have on then? R6N back from India regarding all sessions. Can you please clarify that orders can be placed from 9 a.m. but actually executing only happens at 12? No, that's no. All sessions.
I can.
Sorry, go on.
So on leverage, which is what we were talking about, you can trade call in from 9. Okay. So on leverage, it's from 9. Okay. However, if it's a non-leverage, so share dealing or ISA or SIP, then what you can do is you can do it from midday 12.
Right. Okay. So
yeah,
that's the difference.
Yeah.
R6N.
So leverage from 9 and then non-leverage from 12.
Yeah, but if CFD and spread betting, you trade from 9 and it executes immediately.
Correct.
Well, hopefully, unless you put an order in. Good stuff. Right, Rui Ferreira in there as well. A very good morning to you. And Andrew McKelvey expecting OMI to rise again on another great drill result. Oh my goodness, this stock keeps on going.
And on the share dealing orders in the pre-market for share dealing, so between 12 and half 2, you always have to do a limit order, and the expiry has to be all sessions to ensure that it's filled within that first 2.5 hours. So that's one to watch out for. Okay,
excellent. Right, we've got Fraser's Group cut to hold at Shore Group, Shore Capital. Sorry, Fraser's Group cut to hold 675 price target. Now I haven't looked at Fraser's in quite a few days actually. So
I've got some more information on this as well.
They dropped further after that. That's quite incredible. There you go. There is what happens after a profit warning. I thought that they had bottomed at 630, but no. Oof. Oh, of course, they're going out of the FTSE, aren't they? When did they drop out the FTSE 100, Mini Cooper?
I don't have the exact date on the top of my head. However, I do have some information from the LSE this morning with respect to Fraser's. So it's basically saying how the board has made it clear to Fraser's that will not recommend the appointment of Mike Ashley or Mike Lennon in the board under any circumstances, whatever commitments are offered by Fraser's.
There we go. Breaking news there. And who was that from, sorry?
I got that from the LSE website this morning.
But which board? Boohoo, was it?
So it was Mike Ashley.
But yeah, they're saying that, so it must have been, I'm guessing, Boohoo, or the other one he was going for was Montclair. Right, so yeah, Fraser's Group, let's see when it drops out. Still not. The 23rd of December, Fraser's Group drops out. So that's all the risk arb guys getting short for that reweight. So 23rd, big date to watch in Fraser's Group. That's done on the closing auction of the 23rd. What day do we? That's a Monday. Yeah, closing auction on Monday the 23rd. Fraser's comes out of the FTSE 100. Really interesting to watch there. But this is, the risk arb guys getting short, and then they come back in on the afternoon of the 23rd, buy back their shorts as the FTSE trackers are selling into them. So yeah, that's always an interesting one to watch. All right, before break then, what else do we have? So, oh, yes, of course. Quite an incredible sight yesterday. I wonder if we can get up a picture of this as well, because just quite staggering after what has happened over the years with this guy. And there it is. There is your person of the year. Wow. In January 2020, we did not think we'd be seeing that again. So, yeah, Trump ringing the bell on Wall Street yesterday to celebrate his accolade. He was interviewed by Jim Cramer after ringing the opening bell yesterday. That's quite an interesting turn of events, isn't it?
Very interesting. Also been reading over the past few days about how Mark Zuckerberg has now been donating to him as well. So a lot of
for the inauguration.
Yeah, so a lot of the leaders in Silicon Valley are now seems like they're coming to good terms with Trump.
Good stuff. Right, we will go through more upgrades and downgrades when we're back, and we will be ready for that opening bell, seeing what's happening on this Friday the 13th.
Let's go.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome back, everybody. How we doing? Mini Cooper having a little practice of ringing his bell just before the 8 o'clock open there. I've just had the funniest conversation in the kitchen.
Go on, tell me.
So I reloaded my my cup of coffee there in that 3-minute break. I hope you guys had the kettle on as well. I know Monkey Man did. But our wonderful lady in the kitchen, so Persia's sitting there and she's drawn out a form. I said, "Oh, what are you doing there?" She says, "Oh, I'm picking stocks." I was like, "Oh, brilliant." And so I popped my coffee. I was like, What ones are you going for?" And she said, "Oh, 200 PG tips, 100 Nescafe, and then I've got to get 7 pints of milk."
I was going to say, get Persia on IGTV.
Exactly, yeah. Well, she will be on here because we got the Christmas special. Now, the quiz yesterday, my goodness, we'll come back to that after the open.
Okay.
So now, young Padawan, you can pick the bell up, and when that clock hits 7:59 and 59 seconds, you start ringing like your life depends on it.
Okay.
Right? You can pick it up now. Go on. You ready? There it is, Friday, off and running. Here we go. Donald Trump does it in America, but you've got Luke Cooper doing it for you here. Which one would you rather have? Come on. We got Time Person of the Year in America and our On-Time Person of the Year here because he beat Pete Warden relative to when Pete hit the...
What time did Pete get here in the end?
Oh, about 8:30, was it? Right, what do we have this morning?
Or without a prep coffee?
So you can see us there, young Padawan. What have we got? Scottish Mortgage Investment Trust up 60 basis points on the open. Diageo going yet again. It didn't hold those gains yesterday, however. Anheuser-Busch in the US. Oh, for Expo down 3%. Carnival down 1.3%. What else are you seeing there, Luke?
We got JD Wetherspoon down 1.07%, Prudential PLC down 1%. We've got Burberry down 0.96%.
Oh, get off my Rios. Rios down 1%. Not happy about that. Anything else in Europe stick out to you? Oh, on the downside in Europe, yeah.
We've got Ryanair down. We've got Hermes down. Louis Vuitton, L'Oreal, Airbus. And Adidas.
Yeah, Adidas, but up 244 now. It is unstoppable. Every time I look at Adidas, it's got a new, in the tens, it goes 230, 240. So yeah, quite incredible charge from Adidas there, considering JD Sports profit warning, and not this morning, and Foot Locker profit warning recently as well. So who's our winners? Our winners are St. James's Place continues to go higher in its restructuring effort. It's trying to get its reputation back up, you could say, I guess. Yeah. And yeah, that's not really, not too much to talk about there, is there? BT Group.
Friday.
Where's our Vodafone? Why have we not heard anything from this Italian regulator yet? But somebody came in with a chippy comment yesterday on the TikTok saying that Vodafone's a dog. Can we just remember, people, that this stock has had 6 pence of dividends since March? So you put those 6 pennies back in and you've got a 75 pence Vodafone. Now, in March, it was 70p, right? So you've had a 7.5% move in Vodafone when the FTSE's gone about 3%, I think.
Yeah, because a lot of the companies in the FTSE 100, such as Vodafone, one thing to take in mind is that they actually do pay a lot more dividends than what the growth stocks in the US do.
Oh, I mean, the stocks are across the whole spectrum in the US. I mean, what do we get? Average S&P earnings yield must be...
Nothing compared to the FTSE.
Yeah, see if you can guess. What do you think that the yield on the S&P 500 is? What's your guess?
For myself.
Oh, this cannot be right.
It can't be right.
No, it cannot be that low, surely. Sorry, I've given it away. Ladies and gentlemen, what do you think the yield is on the S&P 500 right now? With risk-free rates at 4.75%, risk-free rate at 4.75%, you can get a dividend yield on the S&P 500 of...
Can I guess?
Do we have any? Yeah, go.
1.5%.
We're going 1.5. Do we have any higher or lower in the chat there? Is it higher or lower than 1.5%? I'll give you the FTSE as a reference. Dividend yield. So the FTSE currently yields 3.6%. 3.6% on the FTSE. What do you get on the S&P 500? Oh, Monkey Man saying less than 0.5. Well, with some people's targets for where it's going next year, then yeah, that might be right then. But 1.3% is your dividend yield on the S&P 500. But 3.6, almost 3 times as much. And then you get a risk-free rate of 4.75.
Now that's one thing which a lot of investors don't really consider.
Completely ignore.
Yeah.
I remember when the two have been equal. I mean, obviously not that long ago, considering rates were pretty much zero in 2021.
Yeah.
But at least you were getting, some value on those.
Yeah.
But you've really got to look at what your asset allocation is there. Without getting too personal,
Go on.
your savings situation. How do you look at your pension and things like that? I mean, what are you now? 21?
I wish. 25 now, 26 next year. So with my pension, at the moment, because I'm younger, I would take more risk, right? So at the moment, it's 100% equities. Whereas if I was, let's say, 50, I probably have more of a mix between fixed income and equities.
Right.
Whereas if I'm almost in retirement, then I would maybe allocate more to fixed income as it is a safer asset than equities. But at the moment, I'm on 100% equities. Now, with regards to like personal investment, I wasn't in crypto a bit.
You've got a bit, have you?
Yeah, well, I sold it.
And this is the problem when the price moves so quickly, so aggressively. I've done exactly the same. I sold my Bitcoin last week, or the ETF that held my Bitcoin. And but BlackRock coming out and even saying,
Biggest holder now, yeah.
Well, they say that you should hold 2% of your assets.
I saw that, yeah.
When we've seen rhetoric around it come move so quickly.
Yeah.
But yeah, well, one place to have a look at is pension B. It's always quite interesting because that puts all your pensions together. Because I had some with Fidelity. I mean, I've worked at 3 firms, but twice in 2 of them.
Yeah.
So you get some with Fidelity, some with Scottish Widows.
Yeah.
My girlfriend's with Scottish Widows, and she was alarmed that how did they know that I was Scottish, and if I was going to die, then she would be a widow of a Scotsman. But yeah, always interesting to keep a track of your asset allocation. When your S&P 500 tracker is paying you 1.3, a FTSE could pay you 3.6, but you could put your money in, a bank account and get 4.75.
Exactly, the current base rate. I think the key thing to remember with investing from an early age is that you've got compounding. So the more you put in now, the more it will benefit you later on in life.
Very wise words from a 21-year-old. Right. Now, let's go back to those moves then. We've got still St. James's Place.
Still at the top.
Keeping it up 2.2. 294. Is IAG about to hit £3 before our very eyes at some point over the next week? Up 80, another further 80 basis points. Today, Lloyd's, Axel talking about that yesterday, up 80 basis points. A good day for Standard Chartered. It's had a really good year. Marks and Spencer's has had a great year. It's incredible. When stocks have been winners, right? Because you're looking at a great year for St. James's Place, great year for pretty much all the stocks at the top. In fact, it's exactly that. So it looks to me like somebody's buying a basket of the performers. Because I think St. James's Place must be up 30%, IAG, 50? Lloyd's breaking new highs, Standard Chartered up 50% for the year, Marks and Spencer's. That is people buying the winners.
Yeah, like the banks have done very well due to high interest rates.
Yeah.
It would be interesting to see if their performance will continue to be very good, assuming that interest rates do fall from the current base rate of 4.75% here in the UK.
Good, right. We've got, as we said, the performers are doing well, but the laggards are getting hit further. The Pru down 1.4%. Burberry, terrible year, down 1%. Rio's, I think, is down on the year. So, as you were is the message there. It's exactly as it's been all year. And then in Europe, we've got, the autos are actually managing to hold their heads above water. So, a little bit of relief for my portfolio there, thankfully, because there's not much else going right in it this morning. But yeah, pretty small moves across the board. Now, would you like to see some of the options trade I popped on last night there?
Of course I do.
There, let me see if I can find the right screen for you. What have you got coming up the rest of the day?
Rest of the day, I've got a platform walkthrough at 10:30.
Right.
Where I will take a client through some of the key features of our platform and really
In person?
No, so this one's going to be online and really enhance their trading performance. As a lot of new clients here, it's really important that they know quite a few things. As an example, one key thing is on shares, right? We've got forwards and we've got the DFB contract, okay? Now, if you've got a long-term view on the market, okay, and you're going long, you are much better on trading the forward than the DFB. Because with the DFB, you will be charged overnight funding, assuming you hold the position past 10 p.m. each night. Now, the forward does have a slightly larger spread, and this does take into account the overnight funding. But as an example, if you want to hold a position for a year or so, then what you should do is you should trade the furthest contract out and enable rollovers. And then that way, in terms of fees, you would significantly benefit from if you traded the DFB.
God, that's really interesting.
Yeah.
But Pete Ward's never taken me through that.
Oh, of course, you know that, Rich.
So
Come on. You're an expert in this.
What's the right amount? Excuse me. What's the right amount of time? Do you think?
So it depends on the market. Now, generally with shares, I'd say around 2 or 3 weeks. But with indices, assuming you're going long, it's in the trade analytics, which is another very useful tool, which I tell clients about. It's just 5 to 7 days.
Okay.
Yeah. Because if you're going, let's say you're going short on the FTSE 100, Dow, S&P at the moment, because rates are quite high, then when you're going short, you actually receive, and then when you're going long, you pay. So as an example, with the FTSE 100, if you want to go long and you want to hold it for 6 months, which some clients do, then you're much better trading off that indices future.
So if I wanted to go short the S&P 500 for the next 3 months, then what product on the platform would you suggest?
If you're going short, I suggest a DFB, because when you're going short, you receive. However, if you're going long, you trade that indices future, and therefore you will pay overnight funding, but it will be at the start in that slightly wider spread, but you won't be paying 10 p.m. each night.
Yeah, makes such a difference, doesn't it, over your funding, especially over a sort of 3-month position.
And I mentioned their trade analytics as well. So if you place 10 trades or more, then you have access to trade analytics. And that, again, is really, really useful. As an example, Axel has even had a session with one of my clients, and Axel kindly looked over his trade analytics and gave him some top tips about where he could potentially improve.
Really?
Yeah, so that was very kind of Axel. So shout out to Axel.
Yeah, always a shout out to Axel. But the quiz that we recorded yesterday, wow, that was beyond my wildest hopes of how well it went. It is going to be an absolute corker. We're at the premiere of the IG Big Fat Finance Quiz of the Year.
Rich, can you tell us who had the best Christmas jumper?
I will not reveal that because that is one of the prizes.
Oh, okay.
The best outfit. But we filmed this thing yesterday. Let me just give you an idea. We had Axel clucking like a chicken, and Pete Ward's rugby tackling Chris Beecham. So you be there for the premiere of the IG Big Fat Finance Quiz of the Year, and that will be on either the 23rd or 24th of December.
Okay.
I think it's the 23rd. Yeah, 23rd of December at 9 a.m. You're going to see quite a spectacular result of what we filmed yesterday.
Be sure to tune in.
Be sure to tune in. 9 a.m., 23rd of December. Right, let's have a quick look at this tasty platform then, because I have put quite a few trades on in the last few days. So the first one at the top there is my Euro trade. Now, this is for January the 3rd. We're looking at let me see if I can zoom in there. So long, a 104.75 put. Now, Luke Cooper, you were here when I did this, because this was my demonstration to clients We had 3 clients in on Wednesday, and we sat for 2 hours and we went through the whole Tasty platform. From start to finish, how do you get the best out of this thing? Because it can be a little bit intimidating. You're looking at it, first of all, and you get this view. But my goodness, when you learn to use this thing, it's incredible. It's like the keys to the kingdom.
It's amazing.
You are learning just, it opens up a whole new world. So we've got, putting on a, in January, 104.75 put, we're buying, selling a 103 put, and then selling a 106.75 call. The total cost of this, let me see if I can get the trade price, there it is. I paid 51, received 31, and received 13. So that comes to 44. Therefore, I only paid a sweet James Bond 007, paid, hardly anything there to get into that downside on the euro. The only danger is that it goes above 106.75 into the new year. So that was the euro position. Then on Apple, I am short the 260 calls for January, which I'm quite comfortable with because that would be quite astronomical. I had a little go yesterday on Broadcom for the just today. That actually expires at the close today. You'll see I paid $245 for a 170 put, and then I did it in 1x3. So I received 3 times 41, which is 123. So I paid $1.20 to have $12 of downside, but of course that went the wrong way, so that's going to be worthless. Boeing, I'm short the 135 puts. Disney, we no change there. We're short some Chinese ETF puts, the $30 put there. Intel, this is a new one yesterday. Now this one excites me. This one, I think, I was watching Day of the Jackal last night, 2nd episode. What an incredible series. And I was going through my Intel trade, trying to find some value there. So let's look, let's collapse all those symbols. There we go. And just open the Intel. What am I doing there? Luke Cooper, I hear you ask.
So there on Intel, you are selling a put, 15 put, buying a call at 22, and then selling a call again.
So selling 3 times the size at the 29 level. But, that is 30% of upside there that we've got from 22 until 29. What I was trying to do is there was more headlines about restructuring in Intel yesterday, and the stock was up 3%. You just get that feeling, is something going to happen, right? We had Omnicom looking at them and said, no, we don't really like the look of it. Then we had the CEO go. Now we've got talks around, some kind of restructuring of the business, maybe selling parts off. The stock at 2080, I wanted some upside, so I've gone for buying 4 of the 22 calls. That was paying 166. Then selling 3 times as many of the 29 calls. I can't see it. That's up 48% or something from where we are at the moment.
Yeah,
so I can't see it going up more than 48%. And if it does, I've got the $7 of profit there anyway to erode. So my break even, I think, is at 32-ish. Received 39 for those. So that is 3 times 40 is 120. And then sold the puts at 15 level because I don't think it goes below 15. There's enough value in it there, unless we saw a big shock. All in all, that comes to pretty much paying a premium of 0. And you get that huge 40% upside or so. So that's my favorite one there. I also sold a Netflix call, 1040, 1040, 1080, selling that for February. So slightly longer than the 45 days 45 days to expiry, but there wasn't really any value in that January contract. So Yeah, up at 1,040. The stock, of course, at 925. So that's above one standard deviation away. And yeah, received, what, about $7.30 for that. Selling the 1,040, 1,080 spread. So that was me busy on my Thursday night while you were at the pub, look, Cooper.
Yeah, but I've got a good excuse. It was Left Terrace's birthday.
It was Lefty, and Lefty was the star of the show, of course, at the Christmas party. So yeah, he's got that 2 great double headers. We just see if we get Lefty on the show at some point. What do you think the chances are?
I'll ask him later today. And I've also got to say, at our Christmas party, we had an amazing host in Richard McDonald.
Well, thank you very much. I think I was doing more dancing than hosting. Right, good stuff. Are you in the mood for answering some questions?
Let's go.
Let's go to confirm and send. Monkey Man pointing out they are surprised that Rich hasn't merged his pensions together. But I think that's what this thing Pension B does, isn't it? And I've got to have a look at this. Somebody told me about this a couple of days ago. So you can combine all your pensions into one place. Yeah, Pension B. And that's a great idea. Why hasn't somebody come up with that before?
Out of interest, would there be some sort of fee from one of the pension providers if you wanted to move from, if you wanted to merge it together, right?
I remember, yeah, because
contract.
What I've got Scottish Widows, Fidelity, but 3 different plans on Fidelity. Credit Suisse closed down, and they had to, not closed down. Sorry, were merged with UBS, rescued, and yeah, and then there's another one as well, but I can't even remember who the other one's with. But yeah, so yeah, getting them on, remembering the logins and all that's just such a nightmare. It really is. Right, shall we go to question 1, sir?
I'm down.
How does the top 100 traders function compare to IG client sentiment? Oh, that's an interesting question.
Very interesting. So with the top 100 traders on the mobile app, what you can do is you go to the Explore page. Okay. Do you have it up in front of you there, Rich?
I can. Yep, there we go. So on my right, go to Explore. So I'm on Explore there, down at the bottom.
So we've had this quite a few months now, and it was requested by a lot of our clients, and the feedback on it is great. So what it is, we have top 100 traders, okay, and it's updated every hour. And what it does is it shows our best 100 traders what positions they're taking on markets.
Can we maybe zoom in on that, chaps? Yes, I think we can. Come on, it's Friday the 13th.
Well, 13th is an unlucky day.
Well, there we go. I knew they could do it. Right, boom, right in. Go on, get my wonderful complexion on the skin as well.
So
there we go. So at the top there, we've got the German 40. People are short. Vodafone, you can see very wise people long there. Then the US tech, short on tech, long on oil. Looks like long on Aussie dollar, I think. And then the bottom one is the Hong Kong Hang Seng 50. So yeah, wonderful there.
So that is usually updated every hour. Now, one thing to note is, remember you saying that DAX is currently at the top.
That's right. Yes, short DAX is the
DAX. Now, how it works is, let's say we've got 8 or 9, okay, 8 or 9 positions on there. Now, how it works, the one at the top is where the clients have the largest direction in that size. So as an example, it could be 80% short on DAX, okay, then it could be 78% long on FTSE, 72% long on S&P. So those ones at the top of the list basically have the most weighting from our top 100 traders on that market.
Great. And then what about the way that the top 100 traders are selected? It goes back over months and months, or is it even years?
So the way it works is a lot of clients think it would be with respect to profit on a position. However, here at IG, we may have 15 or 20 traders who would actually skew that, okay? So as a result of that, what we do is we base it on the top 100 traders based on longevity of the trade, how many points are made, and how long they keep the position open. Because if we did it just on the larger positions, then it would be skewed, and therefore the data wouldn't necessarily be accurate. And we don't want to give a false impression to clients.
So we have an incredible expert here at IG that has helped build this whole thing. And Ruby Lau is just, she knows every single intricate detail of this top 100 trader system. Let's try and get her on the show. Should we try and get her on in the new year?
New year, yeah?
Right, Ruby, we're coming for you. This is an open invitation to come on the show and explain. She literally sits down with all the data team and all the coders and understands every single intricate part. So it's such a useful bit of information because this is taking, out of all the 80,000 clients in IG, taking 100 traders that show the best performance over the longevity of their history of their trades. And you can see, just going over, short DAX 40, long Vodafone, long oil, short the NASDAQ, long China, long AMD, long BP, long Alibaba, and long, again, the China 50, long the Aussie dollar. So, really interesting. You can see the skew to the long side there on some of the underperformers of the year. But yeah, interesting one on BP, AMD, Alibaba, and Vodafone on the long side. Very few single stock shorts.
Sounds a rally.
There's more. And is there more to it than just on the app? Can we get through to? I wonder if we can get through to more.
So there is more stuff on the Explore page, which is quite useful, such as in news.
Mm-hmm. Yeah, or the Explore page, and then I believe that is where. Now, if you're on the app and you're wondering who is this monkey man, who's Dale's boy, who is Andrew McKelvey that keeps giving us all the information, on these great trades like for Expo, and Gavin Acker's given us the Google. What a shout earlier on in the week. Tuesday morning, 7:15 a.m. They were talking about this Willow chip, and Google opened up 1.4% in the all sessions. Finished up 6%. And then it went up 6 again the next day as well.
Wow.
And you heard it here first in that chat room. So if you're on, if you're watching in the app and you want to get involved in the community, you want to see the chat room, then it's on the YouTube page. The YouTube page is not the Tasty Live page, right? So if you're watching on Tasty Live, you unfortunately won't see the comments. It is Trade Live with IG. So YouTube, search Trade Live with IG, and you can find all the chats there. We have an ex-hedge fund trader of 15 years joining the chat this morning. Mark Knapp, how are you? Mr. Napster, even better than the top 100 traders would be a tab in the app to follow my trades. I'm not sure about that, the way they're looking at this morning, but I know that Napster and I both like the Pru. And we've been having some good chats about that. Napster and I, are you ready for the 19th? We're out. We're going to the darts.
Going to the darts?
Live at the Ali Pally on the 19th. I'll be wearing the...
Who's going to win? Who's going to win, Rich?
Who's going to win the darts or the drinking at the darts?
Both.
Good morning to Alexandros on there this morning as well. Right, question number 2, please. How do you use tip ranks data? I love this.
Yeah.
Absolutely.
Let's bring up tip ranks first.
Right,
Now, tip ranks was heavily requested by a lot of our share dealing clients. Now, tip ranks is really useful because it gives many analyst recommendations, which, is really crucial when actually investing in the stock that you do your research beforehand.
There we go. Right, so there's tip ranks.
Yeah. So one thing to make note of is actually more useful when you go on a specific stock, as it gives you more information instead of going on the stock screener. So as an example, what stock are you thinking, Rich?
Well, I was going to have a look at JD Sports.
Let's look at JD Sports.
Or do you want? Actually, no. Everybody's speaking about Vodafone. Andrew McKelvey actually calling me out and saying, "Oh, we noticed that you which telecom provider do you use there, Rich?" And I will admit it's not Vodafone.
No, you
So
can't say that. I know how much you
Well,
love Vodafone.
the reason there is method behind the madness. I actually worked in a previous job when I was your age.
Okay.
I
21.
was one of those people who phones up and said, "Oh, hello, you're coming to the end of your contract with EE," or no, it was T-Mobile at the time. Showing my age. Yeah, you come to the end of your contract. Would you like a new phone? I can send you a new phone today. Just give me your bank details. So, yeah, there we go. Right, tip ranks now. So the Vodafone, there we go. Tip ranks at the end.
There we go. That's what
Here
you're after,
we
the smart
go.
score.
Isn't that useful? Right.
So that smart score is made up of around 7 or 8 different features. You should, if you go and view more for me, please, Rich. There we go. That's what we want. So these, well, there we've got 10. These 10 features basically make up that smart score there. Now, when investing, like I said before, it is really important to do your research. Look at things like price to earnings ratios when making decisions. Looking at news coming out in the future, what developments with respect to that stock. Now, on Vodafone there, we have got an analyst consensus of hold with an average price target of 85.24p, which is much greater than where it is now, which is 69.2 pence. What do you think to that?
That is well. What's worrying me is the insider transactions. I hadn't seen that 1 million had been sold in the last 3 months. I want to look more into that. The crowd wisdom. Wow, that's it's an interesting. But as I said, what people don't realise is Vodafone is up 11% in the last 12 months.
Yeah.
That's because they look at the underlying price rather than the cum dividend. So put the dividend back in, and it's up 11% in 12 months. And that, for me, is the buyback, right?
Yeah.
They've been buying back 10% of the stock. The business hasn't improved. That's still to come. That's the 2025 story, potentially. That's what the CFO keeps promising. That's not my view. That's his view. But you haven't even had the real strategy come into play yet. And if they get this Italian deal through, the Italian regulator, Swisscom pay them $8 billion, and then next year we see the debt get paid down, but they've got another 10% of the company to buy back. That's why, I might not be on the Vodafone network, but it is certainly in my the McDonald pension there as well, and I'm short the 72 puts for March, and I'm short the 70 pence puts for next Friday. Now, is tip ranks available in the app? That is a valid question. I actually don't know the answer for that.
Let's check.
Oh yes, it is. There it is.
I always use it on the web trading platform, you see.
So it is. If you go to the stock, and then so there's Vodafone, and it is halfway down that page on the actual stock. It goes set alert, news, market data, tip ranks. And you've got all that information at your fingertips there. So yeah, really useful. And you also get the analysts. Oh wow, I didn't even know this. Look at this, McDonald Learning Live. If you click across from Smart Score to Analyst Consensus, then you can get all the upgrades and downgrades of the price targets per analyst on there as well. So we've got UBS on a hold for Vodafone with a 70 pence target, which is nothing. Deutsche Bank, 140 pence target, which is exactly 100% upside on Vodafone.
Wow.
So Robert Grindle, go on. And then you've got the rest. Citigroup, 75% upside. Berenberg talking about 13% upside. So yeah, that's a nice wee in-depth look at Vodafone this morning. Good. Carl Wolf used to work in the retentions teams with the mobile network as well. So this was at Loughborough. I went to Loughborough University, and I was working in my part-time because I was doing athletics.
Yeah.
So it was training half the time and then working in the call centre. But it was for a small company called E2Save. And we used to advertise in the back of the Sun newspaper, the News of the World. And it was, one of those like Dialophone. It was a competitor of Dialophone. My goodness, some of the phone calls we used to get from people looking at the sun, you know, because the advert would say free phone. Do you want a free phone, basically? And I had to bat off the people that just think they're getting a free phone.
Who thinks that?
Well,
Nothing's free.
You'd be surprised. Yeah, but then it got bought by Carphone Warehouse. So they sold the business for 10 million from nothing. We started off with literally, 3 boxes of phones in a warehouse, and we used to, if you sold one, you had to run, get the mobile phone, get a free headset, put it into a box, and then take it to the mailroom. And they built that up from 3 boxes to selling it for 10 million.
Very impressive.
Pretty impressive.
Very impressive.
And that was obviously in 1972, so that was quite a lot then. Right, Dale's boy also working night shift for Orange during the millennium, expecting everything to crash at midnight. So yeah, it's looks like everybody had a little part-time job. What was your first job, Mini Cooper?
My first job, well, when I was at uni, I used to work in the holidays at Stansted Airport. So I used to do security searches there on all the carts to make sure that they didn't contain like knives or bombs or anything like that.
In what, sorry? What did you search?
So it was at Stansted Airport, and the carts which used to go out to planes, okay, they all need to be searched beforehand. Okay.
What, for private jets?
No, so this was for like Jet2, British Airways.
What cars go to the planes though?
Carts.
A
cart,
bad.
like
Jet2
have the carts with like the food in.
Yeah.
So what I'd have to do is I'd have to search them, okay, like being watched by security.
Right.
Like have mirror look under the cart, everything, and like sign it to show that I've actually searched it, to check that there's not anything there that shouldn't be.
And this is when you were 18, 19?
Yeah, you have to be 18 to do that.
Great. So we relied on an 18-year-old.
I had to do like 3-month security check. Like they have to do like additional checks on you to do that.
And you passed?
Of course I did. Do you not trust me? Would you trust me to search your cart before going on a plane?
Do you want me to answer that? Oh, to think how many times I've flown out of Stansted.
And I did, when I was younger, I did like volunteering in a charity shop as well.
Oh, very nice. Which charity shop was it?
It was called St Elizabeth's, near where I lived.
Big shout out to St Elizabeth's. They do incredible work, don't they?
Yeah, I was 16 at the time, so very long, 9 years ago.
Right. God. Try to work out how many years ago it was since I was 16. Right, let's get one more question in before we invite Chris Beecham into this room. Should investors focus on growth or value stocks in 2025? So we touched on this, didn't we?
Yeah, we did.
With the look at the dividend yields.
Yeah, so this is an interesting one. Now, my view on this is for the upcoming next 3 or 4 months, I can see the US stocks, okay, doing well. However, towards the latter part of 2025, I'm not too sure if this can carry on, because we've had such a good year for these growth stocks. You've got to think, will there be a shift to value stocks? I have been reading a lot of articles online which do actually suggest this. What do you think? What do you think about it, Rich?
It's tricky, isn't it? Because that is a very wide-held consensus. Now, I've got a client lunch today with 9 of IG clients.
Yeah.
And we are going to do some kind of look at price target. What is your year-end price target for 2025?
Okay. Now,
but more importantly, how do we get there?
Yeah, I mean, for the S&P 500, I've been reading at the end of 2025, the majority of predictions are 6,500.
Yeah, anywhere between 6,500 and 7,000.
Yeah.
Right. I haven't seen one prediction yet that's 4,000 or 5,000 even.
No.
Not one single prediction have I seen for the market to go down. And this is what we're going to be doing December the 30th and 31st. Angeline's going to be off skiing on the slopes. I'm going to be here by myself.
I can come in, Rich. I'm working those days. I'm working New Year's Eve.
Oh, brilliant.
Yeah.
Right, okay, so there we go. Mini Cooper with us. So, we're going to be looking at all the price targets and how price targets have worked in the past.
Okay.
Relative to, analyst consensus. And it's just a shambles. It shows you, how much they're worth, the paper that they're written on. But by that time, we should have, I get a great summary every year of every single research piece from the banks.
Yeah.
So I hopefully put together a nice little, well, maybe you can help me with it.
Of course I can. I'm always happy to help.
Are you good on the spreadsheets in Excel?
I'm okay. I'm getting better. I've done quite a few courses.
Really?
But with regards to Excel, don't really use it too much at the moment because we have our systems for like trading, checking clients' order histories. That's mainly what I'm using in my day-to-day job.
Now, you know, with the risk of being accused of bullying you,
which has happened many times before.
Have you noticed any changes to your keyboard?
No, but if you've done anything, I'll be fine because when I was younger, I did like this touch typing course. Seriously, it's part of like the Duke of Edinburgh Award where I did the volunteering. So I should be fine. I should be fine. But if I make any mistakes in my trades, I know who to blame.
Yeah, it wasn't. Don't worry.
I'm joking.
I've turned around. I've changed over 2 letters on your keyboard about 10 days ago, and I managed to go in and get the letters
I
out.
genuinely don't look when I type.
Foiled. I'm gonna have to get Sam instead. Maybe.
What about Ronnie?
Who's the worst for who types like this and looks at what they're typing? Because
Sam doesn't, to be fair. Pete doesn't.
I took out the L and the M because was it the L and no, the L and the K.
I know where they are, so L would be there, but that one there.
And K. How far away? How far away are the L and K from each other? Considering those are 2 out of the 4 letters in your first name. Which is why I went for them.
K and L both on this side.
Well done. So I swapped. So if you go back now, you'll see the L is where the K is meant to be and the K is where the L meant to be. And I was really hoping that you would be like, why can't I sign into my my passwords? But yeah, you haven't noticed. 10 days. Well done.
Well, none of those 2 letters are in my password, so it's safe there.
Well, I was more going for your name.
Username.
Yeah. I was. Well done, Adam. Adam Deleuze also knows the L and K, and you don't even have a K in your name, Adam. So good stuff. What is the best prank that you have ever had played on you or played on somebody at work? So a reminder, I phoned in about 2 weeks ago.
Whoa.
And pretended I was at Heathrow Airport and put on a dodgy,
Talk about bullying.
Welsh accent or something.
Whoa, it wasn't Welsh.
I'd say
it was more Russian.
It wasn't my dulcet Scottish tones. And it was Thanksgiving, so of course the US markets were closed, and I was shouting at Mini Cooper to get me price and size in Boeing.
Now Rich was very smart about it because he put 141 in front of the number, because if he called from his own phone, I'd know it was him when I got the call.
Yeah, and I had to block that out first of all. And then I had to take your train of thought because I knew you'd be prepared for it.
Yeah. And the other one was Burberry line of check. Did you get someone on that? I don't think it was me.
Pete Ward on that.
Pete on that.
Pete, do you have do you have the check line of Burberry? I think it trades in Prague. And so he shouted across to the trading floor, guys, I need a price in the check line of Burberry. Good stuff. Right, okay, enough of the monkeying around. See what I've done there?
Oh.
We'll be back with you soon. Angeline's got Chris Beecham coming in. Please write your questions as to were they on opposing teams in the quiz or were they on the same team?
Oh.
We'll see you after the break.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Hello, trader friends. Welcome back to Trade Live with IG, and we have Chris Beecham with us on trade expectations. Hey, Chris. Good morning.
Good morning.
I'm very good indeed. How are you feeling after yesterday's quiz? We stayed, I think it was 2 hours in the end, recording the quiz. Yeah. For those of you,
I think.
Best moment was, I think, Axel doing the or acting out soft landing.
Yeah, that was very good. But don't give it all away because they won't see it yet, will they? But yeah, it was a few good turns, I think.
I like the sort of like side shots of people pressing buttons and buzzers early, or the bits where I'm doing something totally ridiculous. Hopefully, Dan Gummer, please edit that out. Speaking of ridiculous, stocks still in this melt up mode. However, we are seeing some sort of stabilization, although it has to be said, volatility is still very, very low.
It is really. It's down again this morning after a little bit of a bounce over the past week or so, but it's stabilized really around. Well, if you look at the VIX product on the platform, it's around about 15.6. So that's still quite a low level compared to where we were even over the summer.
Yeah.
But it's kind of, you expect that as we go into year end. Obviously, the catalysts are drying up fast. Yeah, you had CPI on Wednesday and ECB yesterday, but it's not enough to drive massive expectations. Now, the one thing left is the Fed. And expected to cut rates. The key, of course, will be, and I'm sure we'll cover this ad nauseam next week, but the key will be, I think, the forecast of 2025, because this is very much going to be the focus, with inflation showing signs of life and stickiness. What can they do, really? Can they afford to keep cutting rates so early on in the new year?
I have a feeling that we might, and certainly looking at the Fed Watch tool after that CPI number, it's going to be we're seeing real uncertainty out there, aren't we, for the beginning of next year?
Yeah, we are, I think. And this is the really interesting discussion of how persistent is this inflation, this latest sort of recovery in prices. If it starts to go meaningfully above and employment remains strong, what is their solution? Now, clearly, they won't immediately pivot towards hiking, but you can expect to see the language get a bit more spicy, I think, in terms of vigilance, and we stand ready to respond if needed. So that having gone through a year where they finally started cutting rates, and of course they started with a bang in 50 basis points, which I think most of us would probably agree was probably a bit too much at the time. Having finally got through that, and markets continue to rally, how will they start to adjust to a world where we're expected to see maybe a slight increase in interest rates? This isn't a repeat of 21, 22 again, but how will they respond when you have maybe Powell having to adjust the rhetoric to be a bit more hawkish, because the situation is beginning to shift back in that direction?
Do you think markets...
that would be very interesting.
Yeah. Do you think markets, Chris, are starting to take note? Because, so far it's been this melt up, but I have noticed that the S&P less than 2% off its all-time high just recently, and lots of different outfits out there that monitor the sentiment as well, and they've been seeing that positive sentiment has been dropping off. Just having a look, pulling it up here on my screen, the US 500 for our trader friends here, because if we look at it on the daily chart, here we are. We are seeing some semblance of that, a bit of a plateau in this upward rise here in the last few sessions.
It really has slowed to an extent, but then of course slowed around these record highs. What's interesting is so far this month, out of the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions so far, only one of them has seen more rising than falling stocks on the NYSE. And this is the kind of thing that's happened only twice before. And when I mention this, I don't want to imply that these are about to happen again, but it was 2000 and 2008 when we saw this last period where the S&P is within spitting distance of this record high, but you are seeing more falling stocks than rising stocks on the NYSE. And this is, it could be, and if you're a statistician, of course, n=2 isn't much of a sample to be dealing with, but I think it is just a sign that things below the surface aren't exactly great. If you look at the equal weight index, the S&P, that's been declining. If you look at the Dow, which arguably, I wouldn't want to say is a better measure of the US economy, but is less reliant on tech, and that is 1,000 points lower than it was just over a week ago. So clearly the pressure is there to an extent, and the tech stocks are doing their best to support this market at these levels. But you do maybe just risk some kind of volatility event early in the year, just to clear the air to an extent, really. And
to recalibrate as we head into the new year.
Yes, if you look at the CAPE ratio, we're below the levels we saw in 2006, cyclically adjusted price earnings ratio. If you're not familiar with it, it looks at the long-term average of where US valuations, well, you could argue where they should be, or certainly just gives you the average and the standard deviation to either side. And they're well above that first standard deviation, and they're well on their way to hitting the 2000s highs. And you might argue that, as so many do, it's because US earnings are strong, US economic growth is strong, particularly when you compare to everybody else. We've had UK GDP declining for the second straight month. You might argue it's justified, but it just feels a little bit optimistic. And right back at the start of the week, Rich and I talked about David Rosenberg, the bearish economist, turning cautiously optimistic on the economy. And it's just those kind of things that align with maybe this is just a little bit too exuberant in the short term and it needs something just to reset things. And markets don't ever do what we want, but 10% drop into the year would probably just do the right kind of thing to just calm everybody down
and keep it going.
Remove some of these things. Yeah, that's what you want as a person. If you want to see, and as a long-term investor, we all do, I think, arguably, you wanted to see this keep going. You don't want to see it keep going up without a pause because it starts to worry you. You want to see it go up and down for buying opportunities, if nothing else.
What's also interesting, Chris, is that we're seeing the same leveling off in the small caps as well. We've talked a lot about small caps versus big caps, going into 2025, and how it might be 2025 might be the year that small caps will shine, but we're also seeing the leveling off there. Still gains in the Mag 7, of course, but not as stellar as earlier this year. And the average stock also not acting as well. Divergence between the S&P 500, as you mentioned, and the S&P 500 equal weighted at extreme levels. What do you think the jobs market is going to do, given we saw the data yesterday? Rich and I talk a lot about this. The Fed almost had its eye on inflation so much, and once that was fixed, then they sort of switched direction instantly to like jobs. But do you think a quick swing back in 2025 to inflation is a problem again?
It's certainly a short-term risk, I think, and that's the way we should look at it, really. It's the US is $3-4 trillion economy. Simply tweaking interest rates a little bit doesn't tend to have that much of an impact. I think in this case, we maybe give central banks too much credit. But it is, I think, just a question for the short term and the relative attraction of various assets. And if you have a Fed that's prepared to maybe shift slightly back towards hiking, that means the dollar continues to strengthen. It's particularly interesting. And that, of course, has major implications for emerging markets, countries that are key commodity exporters, because that starts to hurt commodity prices, it starts to hurt their borrowing costs, starts to lead to a slowdown there, which can feed back into the US. That's a major problem. So a lot of this is all connected. And I think it comes back to the idea that US stocks have had a tremendous run. They're pricing an awful lot of growth at these levels. Not saying they can't match that growth, but as we saw this week, actually, with Oracle and Adobe, both had fantastic results and both saw revenue growing solidly. And in their key cloud computing businesses, they did really well, but their stocks still fell after results. And it's just that the market is getting a bit intolerant of just enough. It's not even earnings misses. They're not missing earnings expectations. They're meeting those, but it's merely investors saying, well, okay, that was good, but does it justify the gains we've seen in stocks in the short term? And that will start to feed through to everything else, including the Magnificent Seven, really.
Speaking of shocks and surprises, but I'm sure you know this because you're really good at quizzes, Chris. So given the day it is today, this is a really good one to know if you like pub quizzes like myself, and it's an easy point to get for the team. In which area is Friday the 13th, or which sector significant in trading, or most significant? And
Don't know.
It's tied to naval history. So
I don't know.
So
I could guess, but go on, do another quiz.
So it's a date that weirdly enough is bandied around in the DSEI, so the Defense Expo, because especially for companies that create products for naval ships, the Navy do not sail on Friday the 13th. That's the one day
Right.
where they just kind of fly. So let's talk about Friday the 13th for next year, or like areas where you see red signals. A lot of our trader friends asking, can you ask Chris about, where he sees the red flags and where is likely to see green flags. So still good. So let's look across this year. I mean, NASDAQ year to date, around 27% positive. Dow did really well as well, 17%. S&P 500 up around the 28% mark. But also, let's not forget, of course, energy stocks also have done quite well. Energy sector year to date up 7%. But materials and mining down around 3% for the sector, but the year-to-date performance not as good as energy, up around 5%. Where do you see the sort of opportunities? Where do you see the red flags for next year?
Well, I think that the piggybacking off the Chinese this morning, or the China to fall in China indices again, you've got miners down on the FTSE again this morning, which is, I think, a growing sign of disappointment there. And so that doesn't bode well for materials at this point in time. Otherwise, if you're looking at the UK, banks have had a fantastic run. They're up again this morning. I think Barclays and NatWest both in the top 100 gainers this year. So a very solid performance in UK banks. And it may well continue that way, even if the BOE do start cutting rates or continue to cut rates in a more aggressive fashion. So I'd look at those particularly. Outside of the UK, really, it's hard to pick, and it isn't really connected to the US because this is where the growth comes from. This is where the earnings growth is there. Retailers have had a fantastic run. People are doing plenty of business really in the sector. And so far, with Americans confident on the economy, that's a fairly good read across the spending. So that's a key one to watch, I think, really, as we go into next year. How can this consumer sentiment that's still very, very strong, can that persist into next year? And how does that feed through to the broader economy? Is there enough good news to keep them going? And certainly if inflation starts to tick up again, and because we know which parts of inflation they're watching, and then there's bits that we strip out when we look at core and super core, they know that's what they're watching, then that may be, it's just a thing to keep in mind. I think a potential red flag for the sector if spending starts to slow.
Natural gas, you've been writing and talking a lot about natural gas as well, given the weather sweeping across. Is that a sort of bright spot in the next few weeks if someone was looking at placing a position over the holidays?
Well, it's certainly had a good run this week. I think it's up 12% over the past week. So it's a resumption of the uptrend because if you looked at natural gas since August, it's had a very, very solid run. We've sort of increased by about 60% in price. Took a bit of a knock in late November, but it's doing what you want to see it doing in an uptrend, i.e. it makes higher lows, excuse me, and higher highs. And it had a gap higher to start the week. Very interesting to watch a classic gap higher and then the price immediately give that back, but then resume its move higher. So from a trading perspective, it was a good lesson in gaps and not chasing moves because it delivered the gap and then it retraced it, closed it out, but then began to move higher once again. So established that higher low over the past week, puts it on course for more gains really into year end, and much depends on the weather. But if you look at seasonality for natural gas, tends to be fairly good at this time of year too. So another one really to watch as we go into the last couple of weeks of the year.
Because of Trump incoming as well, and the fact that he is very much of the drill baby drill mantra, do you think that this will mean that many other countries will follow suit? And we've already seen Australia, the mining magnate there, Reinhardt, saying that this is a key priority for Australia to double down on natural gas production. Is this something you're watching and our trader friends should keep a close eye on in case we get more supply into the system?
It is really. If you looked at the conditions yesterday in Europe, there wasn't very much wind at all. So natural gas was doing a lot of the heavy lifting in power generation terms. And so the demand will still be there. The green energy revolution, continues to be problematic in the sense that you either have an environment where the wind doesn't blow and so no power is generated, or the wind blows too much, as we often see in the UK. It was reported this week that you have to pay wind suppliers to stop producing because there's nowhere to put this power. So it continues to mean that people are relying on natural gas for a significant portion of their energy needs, and that means that the prices there are high. If you look at oil prices, the flip side may well apply, because if OPEC increases production, if the US increases production, you could rapidly find yourself in an output war once again, as Saudi Arabia's may be forced to repeat what it did a few years ago, when it decided it would crush US shale gas producers by producing at a much lower cost, and that led to another decline in oil prices, which I think would be very interesting to watch, particularly the energy sector. And it's not been a great year for BP and Shell either, really. And there's talk again of Shell perhaps moving its listing away from the UK, which would be another doom-laden moment for the UK market. It's enough when you have a company like Ashtead leaving, but if you look at Shell, obviously the heavyweight, it's a big part of the index leaving. That's a major problem. But we want to watch oil prices really if production does surge as we go into the new year and beyond.
And speaking of oil, we're seeing this range bound. This is the daily chart here. I mean, it really is just, meandering around that 60 handle, and also around the 72, just range bound there. Is there any sign or signal you're looking for, other than the ones you mentioned, that could make it break out? I guess if we've got more geopolitical tensions, but is there any point in which we've got lots of WTI and Brent traders here looking for, an opportunity? Do you see any?
Yeah, in terms of the Middle East, it's been interesting because you've had more than a year in which you've had substantial conflict. You've had 2024 saw the first direct conflict between Israel and Iran, and yet the oil price remained relatively sanguine about the whole thing. Syria disruption this week has been fairly minimal. So in one sense, it's not impossible to imagine, but it's hard to imagine a scenario short of far more cataclysmic event in the Middle East that could drive oil prices higher. You're right, from a price perspective, essentially oil, though it's still down on where it was in April, and you can argue there's still a downtrend in place, it really has entered this sideways consolidation mode. It's another great example of how markets don't trend all the time. And sometimes you will just be faced with a market that has been essentially doing nothing for the best part of certainly 2 months, if not more. Since the end of September, we get down to 67 in WTI, we go back up to 70, 72 or so, and they go back down again, rinse and repeat. And that's exactly what we've seen this morning, because you had the price rally to $70 yesterday. It's been a very solid week for crude oil prices. It's hit 70, and now the momentum's just started to ebb away as the week comes to an end. So it's if you're range trading it, brilliant. You can continue to pick your tops and your bottoms, but at some point that will probably break out. But I suspect it's more likely to break to the downside than the upside, at least in the short term, because of the prospect of just more production coming on stream.
Yeah, I agree. And also, if you look at it further out, it does look like it's you're still in a overall downward trend. But range bound trading, like Chris said, or maybe even slapping on options. We'll be right back after this break, because Monkey Man is asking, hey, Ange, I've heard that Chris is also going to talk about the super cycle. Not sure, but I will check for you after this break.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech, and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. Then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Hey, trader friends, welcome back. And we are back with Chris Beecham here, Chief Market Analyst at IG. Monkey Man, I did check with you, but apparently he's not speaking about Super Cycle today, so maybe it is in the coming week. Chris, cycles, UK economy. Let's talk about that. Instead, it suffered its first back-to-back fall. The economy shrinking a second month in October in the run-up to the new government's first budget. I mean, this is all a continuation of bad news, isn't it?
It is. Yeah. Bloomberg, I thought, stuck the boot in a bit unfairly this morning, noting it's the fourth time we've had this, is it? I think they've been in power 4 months, and yet, hang on, what did they actually say before I misquote them? You've only seen economic growth in 1 of the 4 months that Labour has been in power. Now, that's probably a bit mean because you can't do that much as a new government. But the counter argument to that would be, okay, October was grim, and then you had the budget. And as we saw from people like Currys just yesterday, prices are going to have to go up. Businesses are facing increased costs. What are the figures going to look like for November and December when the news of the budget is in? Now, the Chancellor might say, we have put the foundations for growth in place, but the data is showing you one thing and they're saying another. If you look at the market impact, we talked just yesterday about the Bank of England and how much they might have to cut next year. I think Bailey's still going for 25 basis point cuts. Is that enough now to move the UK economy to try and help? So if they have to go faster and risk higher inflation, but it also means that the differential with the dollar widens and continues to increase the flows to the US dollar. So really, it's a similar position now to what the ECB finds itself in. We had that yesterday, of the weakness in the Eurozone economy necessitates economic rate cuts, even though maybe the inflationary picture doesn't argue for that. Wage growth data for the next week, it's one to watch because next week's your biggie for UK CPI, UK employment, UK retail sales. And if you see, as we're expecting, more growth in wages, there's the risk of inflation coming back. So you get a weakening economy, but rising inflation. So the nightmare of stagflation comes into play. So it's not a great place. I was at
a party on Saturday with quite a few UBS and also HSBC people, and this was the day after the IG party on Friday. You should have come. It was great fun, Chris. You would have loved it. I know you don't consider that sort of, or you consider it noise and not music. But for trader friends, for those of you that are watching, Chris is, very accomplished in music and the organ. But it was great fun. Everyone was just completely, demob happy. And then I got hit by Saturday because I completely forgot about this other party. But, describe the headwinds facing the UK economy as a beautiful mess.
Mess, certainly. Yeah, I don't know about beautiful, but yeah, it's very unpleasant to say the least. It's a very tough world. Even Euro Sterling's rallying for a second day in a row, which tells you a lot, really. And admittedly, that's taken a hell of a beating since August. Really, if you've been short Euro Sterling over that time, well done, because it's been a great downtrend and shows no sign of ending. But looking at the overstretched
Euro
downside
versus sterling
over the past sort of. I mean, since late November, we were 83.50 and we dropped 100 points on that, and now we're rebounding a bit. But that direction of travel there is clear. Lower low just this week. So I think gloom persists for both economies, really. So almost one of those Keynesian beauty contests coming to play. Which one do you think will be worse? The Eurozone or the UK? Really? Not great at all.
The ugly contest. Speaking of which, German exports we saw also falling more than expected in October. Rich and Luke this morning talking about how can Lagarde say that they've seen success, but especially with Germany's economy faltering and also political stalemate in France. What do you make of the outlook for the euro, given those two things aren't going to go away anytime soon or be fixed anytime soon?
Sorry. Every time you ask me about a question about the gloomy things, I laugh. I can't help myself but get grim humour with this because, look at France. We're appointing a new prime minister today. Does it matter? No, because if Barnier can't last 3 months, can the next one? And as we were saying last week, the far left and the far right will be out to get them, and to bring down the prime minister, to make sure that the president looks as impotent as possible. So that's not great for the Eurozone, to say the least. You've got one of the two key economies, and then in Germany, elections, uncertainty there. The far right may well make progress there too.
It's like March sometime, isn't it? Is it March?
Yeah, exactly. Or is it earlier than that for the German elections?
They brought the date forward. Why on earth does it take them so long?
Well, this is always the way. With the UK, you can have an election practically on a dime, really, these days. It's always been the way. It moves more quickly, but different systems, I suppose. But it's certainly, for looking at the Eurozone, it is a problem. And then you have the reports that NATO are going to recommend that member states spend 3% of GDP on defence in a time when it's taken 6, 7, 8 years to get at least half of them to the 2% level.
Yeah.
So more pressure on straightened government budgets, because the alternative is that Trump comes and says, well, we're not helping you. So it is a really tough period for Europe on the economic front. Yes, the DAX is at record highs. We're going to talk about this. Is it partly
I know, right?
Part due to SAP.
Look at that. I mean, it's just...
There's
1, 2, 3,
performer.
4, 5, 6, 7, 8, 9, 10, 10. Other than that one blip of the red candle there, it's a real run of up sessions. And
it is. It's a great lesson in holding your positions, because if you bought the dip in September into October, and then you'd seen it struggle all the way through the second half of October, November, and then it delivers you 1,500 points of upside in a couple of weeks.
Yeah.
And it's so often the way, particularly with the DAX. I think it will go through periods where it doesn't move and then it suddenly shoots higher. But it's often the way that you miss out on so much by closing out your trades too early. You think you've done okay for making 500 points. If you'd held on, you'd have made another 1,500, because it then just took off.
If you say buy the dip again, I'm going to have to call you guacamole.
Yes. Well, we do what works, really. And for the moment, that continues to work. We were talking about yesterday about breadth on the S&P, actually, to switch over back to the US. As ever, there's no escape. If you looked at the S&P, it's just off those record highs, but only about 40% of the index trade above their 20-day moving average, was a short-term measure of breadth. Usually that's the kind of thing you see after the index has come off about 5-6%, not when it's sitting just below record highs, which might suggest, and here I'm going to deploy the phrase Santa rally, is also due.
Yeah.
And if it does start, it's supposed to start from about now into next week.
Yeah.
And really interesting talking to clients earlier this week, saying, oh, well, it's already rallied, so the Santa rally has already happened. And it's an interesting test of sentiment for people who are already arguing it's happened, does that mean the market will continue to surprise us by delivering even more upside for the end of the year?
I think in
Really,
the
I think markets
PCM's
always do what people least expect.
PCM's podcast, that's right. The PCM's podcast, they were looking at I think it was optimum date was 15th, wasn't it? Either
Yeah,
14th
it's
or
around
15th.
about then we did the numbers. It's usually from about the 12th or the 13th of the month, or 12th or 13th trading day of the month anyway, which we should be into next week. So if it does start, be aware it starts from next week.
Nice. Now, and are you still around next week? I'm still around next week.
Oh yes, yeah.
Like, let's
Got to
go
be around
back.
for the Fed and the BOE. It's too much fun. Not for
I
me.
know, right? It's no rest for the wicked here.
No.
Normally you think it kind of quietens down, but not this year. Just swinging back to the Germany 40, because this is one that Axel trades a lot. I also find that this price action really fascinating. Do you think this momentum, upward momentum, can continue despite the fact that it's got political, Germany has political issues, but also the fact that China, the data that we saw today, it showed a fall of 3.8%. You know, exports to China, and you know, this whole promise of this China continued stimulus hasn't really come true, has it?
No, it's fine words, but fine words butter no parsnips. Really, this is the problem. People got sucked in again on Monday. The euphoria, China's changing the language of its policy statement, that was enough to really give you that 1,000-1,500 point surge on Hang Seng, and other China indices doing very well. But we've seen it.
What's whacking up the Hang Seng for you?
Just drift back again, and that's the problem. So from a technical perspective, 21,000, your line in the sand there. It's where the concrete measures have to come through. At some point, you have to stop talking about it and start doing it. And that's the major problem here. Is that if you're trying to bull, fair enough. But at some point, you've got to say, well, what are the actual measures we're going to implement apart from just talking about it? Really, that's the major problem. But yeah, for the DAX, if it was me, I wouldn't be looking at going long the DAX up here after 1,500 point gain in the best part of 2 weeks. It was the time to buy is always, you have to use something like stochastics that I use just to provide indication. It won't get you in at a perfect price. It might always work all the time, but it might be quite good at sort of flagging the dip, or purely from a price action perspective when it was beginning to find support around 19,000. And it was seeing a lot of volatility around that, so you had to be prepared for that. But it then took off. So you have a rally, you had your higher low, it's rallied to a new higher high. You buy the higher low, not the higher high. So wait for it now. If you're already in it, fair enough. Because it might be that it gets dragged higher with US markets into year end and a little beyond of that. And then we'll see where we go, really. I mean, I certainly wouldn't be thinking of buying it right now up here, really, when even the 50-day moving average is almost 1,000 points away.
Yeah, that'd be crazy. Don't buy at the high. So Chris there saying pay attention to stochastics. Also taking a look at the mood music surrounding tariffs. You know, we're now starting to see the mood music change slightly into trade negotiations. If you notice, the past week has gone from trade war to trade talks. And we've been here before,
The jaw
hasn't
is
we?
better than to war, as Churchill said, really. We have been here before. It's, and we've said this the past couple of weeks. We have seen this script before. Trump comes in, makes a statement, negotiations come underway. You give him something to go home with, and it's sorted. Their tariffs will come in, but
Not as high as everyone thought.
No, it's a negotiating position. This is what you do. You'd say if you want 20% tariffs, you're going to argue for 60, aren't you, in order to come away with a win. It's basic negotiation. It's the to borrow a phrase, the art of the deal. And that's exactly where we are, really. And the market's beginning to price it in. If you expect tariffs to boost inflation in the US, it boosts the dollar, which offsets the impact of tariffs to an extent. Really, really interesting. And the fact that you have Scott Bessent as Treasury Secretary means that you will have a bit more of a normal approach to this, really. So that was the market's sigh of relief around his appointment.
There's a question coming in whether there's a possibility of the Chinese yuan devaluing amid all this to, what was it, Rich? 8 to the dollar.
Okay, it's possible. I think it's the option should certainly be being discussed in Beijing, that maybe some kind of big measure is needed to unlock progress more than anything else to get that economy moving. If that's part of the overall package, then yes, it's the kind of thing that may well just provide the economy and the stock market with the shot in its arm it really, really needs, because at the moment certainly it continues to struggle. And it's
interesting,
as you
isn't
say,
it?
there's no sign of
And whether or not it will take as long, Chris, because the last time we were back here, and I feel like we've talked about this so much over the last couple of years that it's almost like, oh my goodness, it's like deja vu. I think it took 2 years for Beijing and America to agree to some sort of deal so that both sides didn't lose face. So, we could be seeing, a year to a year and a half of talks and negotiations and saber rattling, right, on both sides before we actually get a sense of where we're actually headed.
We lived through this before, and you forget then, it gets telescoped in your mind, and I think you forget how you're living through it day by day. It can be quite wearing for investors, really. The volatility that could come with it, the headlines, the tweeting starting again. I'm sure we're all looking forward to that. The White House tweeting like an angry child once again. It's going to be fantastic. Why did this move? First thing to do, has there been a tweet? And that's what you do. But yes, it will take time. Two big beasts in the room, both with the power essentially to injure each other in various economic ways. It will take time to get to something together. It's like getting pandas to mate. It will take time.
I would argue that they are destined for extinction because, your first point. The second is they only eat one thing, really.
Yep. And the nutritional level. Yes, my biology teacher years ago said they are hopeless. They do not help themselves.
No, they do not. And they just sit there eating that one thing and are too shy to even look the other, sex in the eye of its breed, never mind get anything together behind the bamboo bushes, if you call that. Interestingly, there's been a company that's started marketing panda poo tea. Have you seen it?
No.
So the company sells you
now,
tea,
I won't accept it.
which have been fertilized using panda poo. Who would
Isn't
have
there
thought?
one coffee where you can have coffee beans that have been pooed out by civets? Isn't it?
Yeah. In Indonesia and those parts. I have to tell you, because I've seen a real civet, they're really quite not very nice creatures, and they stink, and there's a lot of flies everywhere. So I don't know how anyone thought, I'm going to search through the poo and wash it out.
See, knowing you, I'd have thought you'd have bought one and kept it just for this purpose. Because you like to grind your own coffee beans. I thought you'd have had one specifically for that, really.
Every morning, waiting for the
harvest.
Come on, then. I did try it because I think you have to try something once to actually, and it just didn't do it for me. I mean, the taste was just not strong and at all. Have you tried it?
No.
I'll bring some in for you.
No.
I'll bring some in for you.
What with that and the Italian cheese? That Italian cheese has been banned because it has live maggots in it.
No, I haven't tried that.
Sicilian or Sardinian cheese? Yeah. It's officially it's not made anymore, but I think it is still made on the sly. But yeah, it has maggots in it. You should get Filippo from Milan office and see if he knows about it for you.
Have you tried? I just can't think of anything worse than to have. I love cheese,
no, it's the kind
as
of
you know.
thing I
love
threatened
cheese.
to buy for my wife for Christmas, but yeah, she hates all that kind of smelly cheese. So that's the kind of thing I threatened to purchase one day. But yeah, she's enough with blue cheese. If I get blue cheese, it has to be in a separate container in the fridge, and probably in 2 containers, really.
I love blue cheese. I love blue cheese. Dolce latte or any blue cheese that's kind of moving at room temperature on its own. But yeah, I mean, it's going to be a really interesting time given China has also, come up with its own sort of tariffs and saying it's going to clamp down on everything from, chips to even sort of gas. And this week itself, I think China launched that investigation into NVIDIA, So we're already seeing the start of that.
Yeah, exactly. And that's everyone uses their leverage in their own way. And that's exactly what you've got at the moment, really. China looking to just turn the thumb screws on the US, really,
Do you
in a
think?
way that they can then lessen the impact of the tariffs.
Do you think we're likely to see them follow through on this and potentially, mess up Nvidia's surge? We've already seen a bit of a move. Let's show Nvidia, which is up almost 1% all sessions. This is an all session stock, trader friends. So yes, our Saxena, thanks for your question this morning. I answered it on the train as I was coming in. You can, on the spread betting side and CFD, so leverage products, you can take a position from 9. However, for share dealing, it's executed from 12 onwards. But let's have a look at this because Nvidia shares did fall as China opened this anti-monopoly probe investigation into the US chip giant. They said it was over suspected violation of the country's anti-monopoly law, but it has actually come back since then. So 9th of September was when it happened over there. It has tried to come back somewhat, not quite back to the levels before that probe. Chris, do you see more ramifications, more of these sort of the impact on perhaps tech and chip stocks going forward?
I think so. China will be looking to hit the US where it hurts, particularly, and this is an obvious one, really. And it's for a strategic competition anyway, because they want to gain some advantage because they know that the restrictions will only increase. They need to build up their own industry. So it's mercantilism of it's back in fashion once again. You have to make sure that you've got enough industry to protect your own national interest. It's a slice of the pie. Rather than making the pie bigger, you need to make sure your slice of the pie is big enough, really, and that's part of it, really.
Speaking of pie, what is the Beecham household having for Crimbo?
We're having beef and then Christmas
nice.
pudding.
Ah.
Yeah, we don't do turkey.
Is that because you don't
Not
like
in
it
this
or
house.
because it's too dry?
Don't like it. It's too dry, really. It's not traditional Christmas meat anyway. Yeah, but we don't do turkey, so it's beef in our house.
And do you do that, presents from Santa in the morning? As an Asian, I don't really grasp the concept because Mummy and Daddy work so hard only to lie to you, to tell you that this bearded person
funny,
has bought the stuff for you, appeared in the night when we told you no strangers in the house or ever, do not speak to strangers, and it's climbed through an excess point in our chimney breast, which
You think this through too much, really. I think you're thinking this through far too much. But what we often do is you buy them, and then you say we're going to send them away to Father Christmas.
Nice.
And then they'll come back as long as you behave yourself.
I like that. All right, and on that note, trader friends, behave yourself. That's it from myself and Chris Beecham. I will be back after the break. Chris is going to go and do his more Christmas shopping, maybe? Are you done?
Yeah, I need to do some more. No, I need to do some.
All right, speak to you later, Chris.
Bye.
Bye.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Right, welcome back to Market Measures. But before that, I have found out why St James's Place is up so strong today, as much as 3.5%. Deutsche Bank raised their target price to 11.50 from 7.75. So big upgrade there in St James's Place. Clearly, Deutsche believe in the turnaround. That's why it's our top performer in the FTSE today. Right, on to Market Measures. Angeline, today we're exploring market tops.
Nice.
We're looking at what happens to the S&P 500 and the VIX when we at potential market tops. So Sahil has looked at the market keeps climbing, hitting new all-time highs every week since the election, which makes our decade-long bull run look even stronger. Meanwhile, the VIX topped out below the dropped below the 13 mark a low level that's been seen in less than 17% of instances over the long term. This is what Elliot Harris was talking about as well. Common question we've been receiving about current markets is the relationship between the broad market, i.e. the S&P, and its implied volatility at market tops. Can we identify a potential market top looking at the VIX? So we analysed the S&P 500 and VIX data from the past 30 years, starting from 1990, which is probably before Sahil was even born. We found two distinct decades with significant amount of occurrences of market highs. So 1990 to 2000, of course, pre the dot-com boom, or pre the peak of the dot-com boom, I should say. And then 2014 until now. So missing out the recession in 03-04, missing out the great financial depression of 8 and 9, and then the recovery from, and the European debt crisis. So there is the graph that we see with the VIX on the right-hand side, the S&P on the left, plotted together. And we find out that over the 30 years, 8% of the days have seen the SPX trading at all-time highs, right? So 8%, which is actually remarkably high. The median VIX during those times is 13.4, which is very close to where it is now. Also, the VIX trading range in these periods is much tighter, about 4% lower than on typical days. Now, that's interesting, but I would rather see the days when you subsequently don't see another new high afterwards.
Right, because...
Or at least, say, a month or something.
Yeah.
So it is actually a peak. Whereas these days include, it could be all-time high Monday, Tuesday, Wednesday, Thursday, Friday, and it would include all of them. But I don't want to know about those first four. I only want to know about the peak of the peak.
Gotcha. And also, for me, personally, because I like trading retracements, I'd like to know when the peak falls off. But I don't. Maybe that's another show for Sahil.
Yeah, we'll get him on that for next week or maybe early January. Are we going to give Sahil a Christmas break?
I think we should. He's such a hard worker, and also, he messaged us all the way from Seattle on his
on his holiday.
But
that's. I'm thinking he's just had that holiday. So I think we'll give you the 25th of December off, Sahil, and the 27th and 28th,
and the 29th of February.
And the 29th of February, very good. I'm getting married on the 29th of February next year. Right, the median VIX during those times, 13.4. So at the days where it is higher. The trading range in these periods is much tighter, about 4% lower than on typical days. So as the recent market environment becomes more relevant, we can dive deeper into the SPOOs and the VIX relationship since 14 to see the trends that have been in place. Traders know that the past decade has been one of the strongest bull markets ever. Wonder if that's anything to do with the trillions and trillions of additional debt created. Except for the period between 2021 and 2022, the normalization of interest rates, the beginning of COVID, and during the 2016 presidential election, the market has consistently reached new highs. Well, that's an interesting graph.
Yeah, look at that. And it's good that you pointed out that creation of trillions and trillions and trillions of debt, because of COVID. Because there was a lot of money looking for a home.
That's exactly it. And it wasn't just restricted to COVID either. The negligence during the period of 2016 to 2019, when they still went on with those with the quantitative easing during times that there was absolutely nothing wrong with the economy, then I think we'll look back on that and just be amazed. Anyway, Right, so still the percentage of days hitting all-time highs remains stable at 8%. And the median VIX difference is also about 4% lower. The one interesting change in the past decade is that the median VIX has dropped to 12.8. That's a big move, 13.8 down to 12.8, even though the market volatility has been elevated since COVID. So at all-time highs, the VIX, median of the VIX is 12.8. The low, 9.1. 9.1 low in the low of the VIX. So I wonder how low it can actually get, because I did sell 14 puts.
Did you?
14 on the VIX for January. Takeaways. And do you want to run us through the takeaways from this look at exploring market tops?
Yeah, so here are the key points. The super strong market over the last decade has led to more frequent days with new highs. And over the long term, 8% of trading days have seen the market hit a new high. The median, though, of the VIX at these highs is about 4 points lower than on regular days. And recently, the median VIX during market highs is down to 12.8 compared to 13.4 over the past 30 years. I'm just having a look here to try and find that information for you, Rich. And I think it went down as far as the, it's really difficult to say because I'm shrinking my screen here for you, but even down to the 10 handle. Is that right? I'm moving this out into the monthly now.
Well, that's it, yeah. If Sahil's saying the low was 9, then
yeah,
that really is just incredible. There we go.
Yeah, it's just, yeah. And, you know, we're creeping towards there, aren't we? We're certainly not. It's just unreal. And the one time that I did trade the VIX, I had to take it off really quickly because obviously, you know, it wasn't surprised that Trump won.
Oh, yeah.
Darn.
Darn. Wasn't. Right, so we managed to get our hands on a bit of research this morning from the mighty Goldman Sachs. Now, you can see here. Let's pop on to what's next, shall we?
Yeah.
What's next? We will be back in 3 minutes.
See you then.
Back in 3 minutes, and we'll look at Goldman Sachs research on GDP this morning. That's why cable trading 126.30.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Hey, welcome back, Trader friends. Almost to Friday. We're almost there.
Right,
So
as in to the end of the show Friday.
And also like end of work Friday, because I have a huge number of Amazon packages coming. And I had a shocker of an evening yesterday because I don't normally go into shops and I try not to buy from Amazon if possible. But Nick had sent all this stuff and bought it because he's now in that frenzy, right? That panic.
Friend zone.
Frenzy. And this person calling me during a client meeting yesterday saying, you're not here, I can't do the accent, can't leave it there. I need a 6-digit passcode. I need a 6-digit passcode. And I was there thinking, I've seen Rich do this where he just says, I'm not giving you any passcode, that's dangerous, and puts down the phone. So I've bought stuff from Amazon before, but never had to give any. Have you? Any digit passcode? 6 digits. And he was like, you can find it. This poor man then calls me back 5 times, right? And I'm there constantly putting down the phone.
Oh no.
No, you're not going to get you're not going to con me. No, it's phishing, right? I'm trying to find your neighbor. No, putting down the phone. So later that evening, I get back, and because we've filmed the quiz, right, which is awesome. You get to see Rich as quizmaster in all his glory.
Well, you put the picture up on Twitter, didn't you?
I know, it's amazing. Everyone's like waiting, and everyone's asking, when is it going to go out?
23rd of December at 9 a.m. in the morning.
So I get back, I crash for half an hour. I turn off my phone because I don't want any possibility of anyone waking me up.
Right.
Half an hour. I wake up, my phone's off, the doorbell rings, and there's this man with a huge package going, Madam, I need to get this to you. I am that person that called you 6 times. And I'm there going, oh my God. So apparently it's a new thing. If your package, whatever you bought, is over a certain amount.
Right.
You now have to give 6 digits.
And so what was it?
Oh, it's some really crazy kick-ass light, like one of those, it was made famous.
So you had actually ordered it?
No, Nick ordered it.
Ordered it.
Yeah.
Right, okay, got it.
Even if you ordered it, normally it's to just give it to my neighbor, right?
Yeah.
If it's over a certain amount, they ask for a 6-digit code now, people. So don't be like me putting down the phone 6 times. So this poor man, who then had to watch me restart my phone to try and get the number. It's hidden on the Amazon site, so...
Well, so no recession at the Ong household. However, Goldman's are now predicting one for the UK. So monthly GDP fell by 0.1% month on month in October. A downside surprise relative to consensus expectations for the expansion of 0.1. The decline was driven by weaker production and construction output, while services activity was flat on the month. Goldman's revised down their Q4 GDP growth forecast to 0.0% versus 0.3% previously. They're taking 0.3 of GDP. That is why you're seeing cable dive so much this morning. Now we expect annual real GDP growth of 1% in 24, and notably below consensus and the Bank of England's estimate of 1.5%. So Goldman's going a full 0.5% lower than the Bank of England's estimate on GDP growth for this year. Imagine what it does to next year's numbers if the run rate into 2025 is as low as that. Oof, painful. That's why you're seeing cable drop down
Whacking
to
up cable for you, if you want to take that up. Yeah, the runway is a real issue. However, for those people looking to buy, it's like music to their ears, right?
As in buy the FTSE?
As in, no, buy a house in the UK, as in interest rates potentially.
Well, that's
And then going
that's
back
the
up
thing, though.
again.
You've got potentially too much risk
Yeah.
for. Let's see what UK gilts are doing. What have we got there? So bonds and rates. UK long gilt is down on the day. So that's the big problem, is that rates are actually higher. Well, tiny bit higher, but rates are unchanged. Even though we're getting this really weak information. That's the concern around the budget. Remember, lower long gilt means slightly higher interest rates. And that is a real problem that we are facing. It's a problem that Rachel Reeves is facing and the Labour government. That, 94.70. Where's my bonds page? Let's get an update on that, where exactly that leaves us.
Taking a look at
the date on UK government bonds. So the 2-year 426, but the 10-year, there's the difference. The yield curve shifting, because that is concerns around long-term economic growth in the UK. Is that budget sustainable at the moment? 436 against 426.
And the FTSE is currently range bound, as you can see there. But Rich is right, this is considerable new headwinds to add to the ones the UK economy is also already facing. But big week coming up with lots of other UK data too. Monday, we've got the global manufacturing and services PMIs. These are the flash numbers for the UK, but also Germany as well. We've got China industrial production numbers and retail sales for November too.
But then later on in the week, we see the magnitude of the importance of the monetary policy decisions with the Wednesday night. We've got Federal Reserve and those new economic projections. So huge point for the week, 7 p.m. on Wednesday.
He'll be there with his bolognese and his glass of wine.
Tapping away furiously.
But such a huge week for central banks. I thought it was going to quieten down.
That's no.
And just
no
last
Christmas
week,
yet.
but it's like it's so busy.
Bank of Japan Thursday and Bank of England on Thursday. And then, of course, you've got quadruple witching, not on Friday the 13th, but on Friday the 20th.
And Issa will be on deck with us on Monday to talk about all those interest rate decisions and how to play it. Issa, of course, specialist in behavioral, I can't say it anymore, behavioral science and trading as well. So it's a good one to watch because
And a macro expert on top of all that.
I learn a lot from Issa, the grit or quit. And also writing down Andrew's expectations of how I will feel if my trade goes wrong or right before entering the trade.
That's right. So that's Isar is going to join us for Confirm and Send 8:20 a.m. on Monday morning. We're going to be talking about his and I expectations for those central bank decisions throughout the week, and take another look at the economic projections that we expect to see from the Federal Reserve.
Speaking of which, I do have a few. I did have a few nibbles as you were having Luke on.
What have you put on?
Because I was listening to both of you talking about euro versus dollar. So I put a trade there, long euro dollar, just £2 a point, opening at 10.469.
Long euro.
I did. Stop at 10.463. We're now up money. Natural gas, as Chris Beauchamp was talking, I also put on a trade there, whacking it up now so that you can see it. Yeah, showing my screen, opening at 3298, and it's now up money, not by much, but still up money. Stop at 3260. So when I pretend I'm not listening, I am actually listening. However, these are
Which
these
bit of the
are
conversation were you listening to that made you want to go long euro?
It's going to be taken off after the show, but I just thought, it's going to like, retrace. I like the retracements. Just like the quiz yesterday. Most times when Rich thinks that I'm actually not listening to him, I am. I'm just kind of like...
We were talking about what a mess Europe was in.
Mrs. Tweed, do you remember?
Yeah, that was very good.
Yeah.
Right, well, I hope you've got stop losses in there.
I have stop losses for that. With natural gas, I haven't got one yet, but I will be putting one down now. Speaking of which, how is your weekend looking?
The weekend is looking like it starts in about an hour because I've got a good friend of mine, Michael Taylor, coming in of Shifting Shares on Instagram and TikTok. And he is also a client of IG. So there are 10 of us going out to lunch at midday. So we're off for a famous Friday long Christmas lunch in the city to start Christmas celebrations.
Where are you going? Where are you going?
It's an Italian restaurant, Recoleta.
Oh.
The one? Recoleta, let's have a look at that. But that is ahead of my girlfriend's Christmas party tonight. So I'm going to get a very, very peaceful evening after I come home after a nice big Italian lunch. And she no doubt won't be home till 3 o'clock, 4 o'clock in the morning. So I'll get nice glass of wine.
Are you getting the spare room? Are you getting kicked into the spare room?
She'll be in the spare room. If she's getting home at 3 o'clock in the morning, I'll be lording it.
Ooh.
Star.
So just really quickly before we go, golden lines, Arish, call out to you that you're asking for Andrew's golden line. So I think that looking at the chart, my humble opinion is that we are, from an intraday point of view, in a downtrend for gold. So let me highlight that again from an intraday point of view, and I would be looking for this chart to cross below the 2,600 level, and that would mean we're in play for my golden line at 2538. So that is all from us. We will see you bright and early on Monday.
On Monday with Minnie Cooper joining us for the first half hour, and then Incur joining us after that. Have a fantastic weekend.
From myself and Rich.
Has China done enough to reassure the markets with yet another promise of stimulus? That's what we're going to be focusing on today on Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. It's been a busy week of data from China. Lots of news to pour through and lots of ways to look at what is developing in the world's second largest economy. But perhaps the biggest news that we got at the beginning of the week was another bit of supporting information from the Politburo, which is a 24-member committee at the core of China's leadership, including President Xi Jinping, that seemed to offer another little ray of hope about policy stimulus. Now, the first bit comes from the monetary side of the equation. We can see here there's a helpful graphic from Bloomberg that has put together how China signals its policy intent. So we can see here that from 2011 to 2024, the sort of official moniker for this was a prudent, quote unquote, monetary policy. And what this announcement from the Politburo suggested was that in 2025, we will transition to moderately loose monetary policy. Now, of course, that is sounding much more downbeat and much more modest than what is actually implied, because, of course, the last time things were moderately loose was the GFC and the Great Recession. So the markets ostensibly looked at this and said, well, they're really going to turn the spigots on now. They're going to shower this market with money. But history does not quite suggest that the markets would find favor with that assessment. So here's another helpful chart from Bloomberg showing what moderately loose has meant. We can see here dramatic rate cutting against the backdrop of the global financial crisis. So as we get into this moderately loose period, there's a sharp cutting of rates, and then rates remain low until we basically get into the prudent phase. But of course, that has not stopped China from aggressively easing in this phase. And indeed, you can see here, really from the start of COVID, of course, but from right here in 2022, most aggressively, China starts to cut rates. And of course, we've witnessed ongoing escalation in this sense. There has been ever more monetary stimulus that has been unveiled last year and quite a few times, as a matter of fact. This year, September was the last big splash, and we've since had more and more and more. We've lowered interest rates. We've lowered the reserve requirements for banks, which, of course, free up, or at least are meant to free up more capital that can go toward investment and spending. And we've seen a whole host of other measures, from shoring up the housing market to outright buying stocks, and thereby creating a level of, or attempting to create a level of upswell in consumer confidence to get people to spend, to get businesses to invest. So there has already been a tremendous amount of monetary stimulus. And the response has plainly underwhelmed. What we find is that when we look at how lending has worked in China, this is the Bloomberg Credit Impulse Index here, and what this measures is the share of new loans in GDP and overall economic growth, in other words. And we can see here that since the beginning of the year, essentially, this index has actually declined. Moreover, it is now, this level index, at the lowest levels we've seen since back in 2018. And the size of these declines is eye-watering, to say the least. The most recent numbers from October give us a 14.5% decline year on year, which was the fastest drop since February of 2022. And interestingly, of course, this is where in 2022, the beginning of it, where the rate cuts really start going. In other words, we don't really have much to show for this stimulus. In fact, things appear to be going exactly the wrong way. Now, what markets seem to again find a little bit enticing in this Politburo announcement was, again, a dangling of some kind of fiscal rethink. The statement from the Politburo saying that officials are looking to be more proactive with fiscal policy next year, which, of course, has been a major source of consternation for market watchers that have looked at China and said, well, obviously this monetary stimulus isn't working. What needs to happen is there needs to be a fiscal effort to actually create demand. And that, of course, has been the core issue in China, an absence of demand. In fact, if we look at this chart that we like to revisit periodically, this is China's GDP growth, nominal versus real, and then the spread between the two. What we find in the past 6 quarters now, so a year and a half, we've had real GDP running faster than nominal GDP. Now, let's unpack this arithmetic. Nominal GDP is the sum of the value of all the goods and services that are produced in the economy. But when you measure their value, there's obviously an element of inflation there as well, which can make the sum appear bigger than the core value of the underlying output. And so real GDP seeks to take out the inflation component, the price movement component, to get just at that. So nominal minus inflation is real, which means if real is running above nominal, then the inflation coefficient is negative. We're subtracting a negative number from nominal GDP, is the implication here. And that's this spread, which you can see is now in negative territory. But consider what this means. Economy-wide price growth is negative. That essentially means the whole of the world's second largest economy has been relegated to the discount bin. When there is demand, that demand tends to push prices higher as that demand chases the supply of goods. That demand competes on price for who will get the goods or services. And that gives you positive inflation, which comes hand in hand with demand and with economic growth, more baseline. What we're witnessing here is the opposite. There is no demand, or at the very least, it is incredibly anemic. And so things are being discounted to try to stoke that demand. An economy that's stuck in a deflationary spiral is essentially signaling that it badly needs for someone to be a source of demand of last resort. And of course, when we saw the same thing during the COVID lockdowns in the West, say the US or Europe, there were vast government outlays to get things moving while there wasn't that demand from the private side of the ledger. This has been something that China has vigorously resisted doing, even as it's promised tinkering at the margin fiscal measures like easing the credit position of municipal governments to perhaps let them spend more, lowering the ratios on down payments for housing to, again, try to induce people into markets. But what we end up with still is the apparent lack of uptake. As a matter of fact, a survey from the PBOC, China's central bank, showed that when asked what urban depositors would do with incremental money, they chose saving by a factor of close to 60%. Moreover, bank deposits are at record highs, which essentially means that all of this monetary easing, all of this provision of cheap money, cheap credit inducements is not creating demand. It's not creating loan growth. People are simply just stockpiling the money because ostensibly there is no confidence for demand and for risk appetite to rebuild. So what happened when China seemed to kind of tease more fiscal stimulus this year? Well, back in September, this was, of course, music to the market's ears. They soared almost 40% in China. This is the ASHR ETF that follows China's benchmark CSI 300 index. Those are the top 300 names listed in Shanghai and Shenzhen, essentially China's version of the S&P 500, a kind of catch-all equity index. Rapid expansion here, obviously, the first time China seemed to float this idea out there. And when it turned out that the measures that were on offer were going to be underwhelming, when we found that what the government actually had when it was talking about these things was a plan to buy up idle land and commercial properties, a plan, as we just mentioned, to shore up municipal finances. All this, again, started to look like inducements for everybody else to spend, but for the central government in Beijing. And once it became clear that a big fiscal package apparently wasn't coming, this move shed half of its advance very quickly. This big decline happens over just a week at the start of October, and then we settle in this narrow range. This was this week's announcement. So there was a bit of optimism, and that quickly faded, and we find ourselves anchored in the same area where we've been. In other words, the markets are looking at this, and they're simply not giving Chinese officialdom the benefit of the doubt until, frankly, they put up or shut up. Economic data coming out of China was also disappointing this week. We started the week with inflation data and had a set of trade numbers that came out later in the week. Here's the inflation data. It ended up being disappointing. We had a set of CPI numbers that gave us inflation of 0.2% year on year. That's the weakest in 5 months, whereas economists were looking for a 0.5% rise, which would have been an increase on the prior month. And of course, wholesale inflation, the PPI component, continues to be below zero, so continues to be in deflation territory. In other words, there is very little demand in this economy, and when it comes to the consumer side of things, we're basically at standstill. On the trade side of things, it was even less encouraging. Exports grew less than expected, 6.7% year on year against expectations of 8.5%. So that pop in exports that we saw in the prior month in October, widely attributed to importers primarily from the U.S., but other markets as well, trying to front run what might be aggressive tariffs from the incoming Trump administration, trying to get their Chinese imports in before those things pick up the price of imports from China for U.S. importers, because, of course, it is U.S. importers and indeed importers elsewhere, but certainly not China, that pays these tariffs. One country can't compel a sovereign other one to pay a tax, and so what we end up with when we have a rise in tariffs is essentially a consumption tax on importers from whatever country is hit with tariffs. But these are domestic firms that have to pay it, and there was a big over 12% year-on-year jump in exports in October that widely was attributed to people trying to front-run those tariffs. What we have now has been essentially export growth that's been cut in half in terms of its speed, and needless to say, a disappointing outcome in its own right. But it was imports that really shocked the system. They were expected to rise 0.3%. Instead, they fell, and they fell hard, down 3.9% year on year, and an acceleration, an escalation, as a matter of fact, after a 2.3% decline in October. Again, stressing this idea that demand, especially on the consumer side of things, is woefully weak. It's not just Chinese markets domestically that got the memo here with this anemic response here. We can see China-sensitive assets, a similar response was there. So here's copper. China is the world's largest importer of it, and it is looked at as a proxy for China's business cycle. We can see it popped at the beginning of the week, but has since gone nowhere. As a matter of fact, has made a bid to erase pretty much half of this initial move. The Australian dollar has fared worse. It popped higher again at the beginning of the week, much as copper did, and has since given up all of those gains. And now looks like it's going to close down on the week fractionally. Although, of course, we still have a day left, so we'll see. But clearly, whatever pop there was to have from this Chinese news did not assist and did not hold. And, of course, to some extent, a slightly less hawkish RBA helped on that front when they announced policy this week. But were China's news impressive enough to overwhelm that? It might have, and very clearly it didn't. So, perhaps the only impact that we really saw stick with markets and get market confidence this week was a move in gold. And it's because we got foreign exchange reserve data out of China over the weekend showing that for the first time since April here, China has resumed accumulating gold reserves. Now, we can see here that from 2022 through 2023 and going into the beginning of this year, China accumulated a massive amount of gold. And that, of course, helped to give us periods where gold would ostensibly decouple from macro dynamics and ignore, say, rising yields and a rising US dollar at the beginning of this year. Because through this period right here, China was still aggressively accumulating. After this pause, this bit stands out and, of course, suggests that given how long the previous run looked, given sort of the 18 months of accumulation that was there before the pause, that perhaps another long cycle is underway. And that certainly gave gold a bit of a lift here. It's correcting slightly if we look at today's price action, but the overall break here out of this consolidation and this narrow range clearly inspired and following along because, of course, yields are again higher this week, as is the US dollar for the most part. That should be kryptonite for gold, but nevertheless, it is on pace for healthy gains this week. So perhaps the markets will eventually benchmark the full stock of Chinese negativity from economic data and lackluster stimulus efforts, or perhaps officials will finally step up. But as it stands, the only confident thing that the markets find as far as Chinese policy is concerned is their attempt to buy more gold for their reserves. As for the reviving of the economy and everything related to all of that, markets don't seem to put much into those efforts until they see something actually materialize. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays, though we'll be off tomorrow. I am also on with Victor Jones for The Price of Truth on Wednesday, back with him and Tom on Sundays for First Call at the open of global markets in Asia and the futures open in the US, writing for the news and insights portion of tastylive.com and opining on the platform formerly known as Twitter, as well as now on Blue Sky at Ilias Pivac. Thanks very much for joining. Macro Money's back next week.
What's going on, everybody, and welcome back to the Bad Trader. I almost said stream, the Bad Trader Show. Today's Thursday, just a day after trying to digest the CPI data with that massive rally we saw yesterday, Julia. But anyways, thanks for joining us, guys. And Julia, how are we doing today?
Dude, I'm doing okay. I'm not doing too shabby on this very, very, very cold day in Chicago. And somebody in my apartment's making a grilled cheese, and it's driving me crazy. But otherwise, I think I'm doing okay. How's everything going with you?
You don't like a grilled cheese and some tomato soup or what?
No, I want a grilled cheese right now, which is a problem.
Okay.
They're taunting me. That's right.
I got you. Yeah, no. Yesterday, I mean, I'm doing well. No grilled cheese. I don't really smell anything, but I am a little hungry. But a grilled cheese does sound kind of good. I could use some carbs, but I mean, yesterday was just a massive day, Julia. What are your thoughts? I mean, 400 something points on NASDAQ. And
I needed that badly. I needed that. There was a huge rally in VST, which I put on a put spread right before it crashed 7%. It's had a really monster rally throughout this year. So I thought, you know what, why not? It's had very strong, consistent performance and then proceeded to sell off, but then recovered a bit yesterday, which I was very thankful for. Today we're a bit red, but finally made some money back on my gold trade. Gold has had quite the rally up until today. Finally, a little bit of a correction, which, yeah, I needed. But yesterday was green. Felt pretty good. We got Bob over in chat. Awesome to see you. Thank you for joining us. But otherwise, yeah, it's just been, sometimes you just got to hold tight. Sometimes you just got to, trust the probabilities and hope for the best.
Yeah, which can be some very difficult to do sometimes.
It can be.
Yeah, no doubt. Leaning on those probabilities. But before we do get into it, you said it's cold in Chicago right now. Has it snowed any at all yet? Or is that more so like January, February time? Or what is it looking like out there right now?
It snowed once, but didn't really stick.
Okay.
So
some slush. That's the worst. The slush. It's like, if it's gonna snow, please snow.
It slushed and then it iced. I think it's in here. Let's see. I use Celsius. It's -9 Celsius, which is like 10 Fahrenheit or something. 16 Fahrenheit. It's gonna hit a low of 5. But with the wind, it feels like 11, which is great. So I've been a little low energy today, but that's just me.
No, I got you.
But otherwise, yeah, no, otherwise it's been, yeah, pretty, I mean, there's been an awful lot going on in the market. Hey, Kat, what's up? Okay, sorry, there she goes. Otherwise, there's been enough going on in the market to certainly be, man, she's just on something else. Let me get this. Hi, buddy, what's up?
Yeah, what are your thoughts on NQ, Kitty? Like, what are your? I don't know if she was hitting the buy button, him, she, he, she, but no, it looks like we're day after CPI. We're kind of digesting the news a little bit. I mean, we sold off just a little bit from the highs of CPI yesterday. I'm really curious just to see how we're going to finish off the week. I was taking a look at the volatility index, and the little bit of the sell-off we got in the beginning of the week didn't seem to have, the index budge any and all to the upside. So it seems like it's that natural or kind of as expected, I guess you could say, kind of volatility into December. But I don't know what it's going to take to see a little bit of a spike in volatility, but it seems any of the down moves hasn't really made it budge at all. So I don't think right now.
And the Bears had 2 good days, and
Yeah,
now we're back here. Yeah.
2 good days. What do you expect? I mean, all-time highs again. And yeah, I guess that's just been the story over the last few weeks. The all-time highs, and some of our trivia is going to actually be themed to around all-time highs. So not really Christmas themed, but kind of stand to rally themed. So we'll get into
Stand to rally
that
themed.
Yeah. So.
We had a very big move in Warner Brothers today. That was up 15%. One you're trading at $12.50. That's not really saying much. You kind of deal with penny problems at that point, penny stock problems. But this one's been interesting because this one has just gotten so beat down, honestly, since 2023. And like we're actually a little green on the year from what I can see. This was one of the worst performers in the S&P, and then it has since recovered, which is nice. And today certainly helped that out an awful lot. As well to the downside. Adobe just completely donked, but I don't really feel bad for them. I don't feel bad for them so much.
Well, what do you got against Adobe?
I mean, from my understanding, might have used like part of the terms and service for some of their design softwares, or that you kind of have to let them use the stuff that you create for their AI training models in order to even use it.
Really?
That's my understanding, which I'm not in love with that. But they said AI. They've said AI many times. This one's been as well, like a bit of especially maybe in early, just like in early 2024, just having a rough year as well. But yeah, I don't feel as bad for it as I probably should. And then let's see what else is going on here.
Got Oracle.
But what else are you watching in the market? Anything interesting?
Not really. I mean, just been keeping an eye on MSTR. I feel like, whenever we hop on stream, Luis brings up MSTR. So I'm like, all right, we're watching it. We're seeing how it's going to play out. But MSTR, the indices, kind of same story with the indices, checking out volatility, and just been a little bit more focused on indices lately, actually. MSTR, I think, was the last underlying outside of the indices that I was really focused on. But other than that, just really focused on things like QQQ, SPY, those kind of things. MSTR is just one that is just leaving me on a cliffhanger. I feel like there's a little bit more, I don't know what the term to use is, but digesting on MSTR to go. And I've just been watching from a distance. So I think crypto has been really the talk of the town over the last 4 to 8 weeks. That's another reason why I've been really watching MSTR. So really just interested in those products that have some exposure to crypto. That's been top of mind for me, at least. Yeah.
Yeah, we were talking about that earlier today, and I think like for me, so I got my IBIT shares, my IBIT shares,
right.
because like I'm bullish on crypto in sort of the long term. I don't really want like an expiration date on that assumption. And in the long term, short term, I'm expecting some price volatility. Bitcoin's been hovering around like 100K, kind of teetering. But in the long term, just kind of wanted some skin in the game. That's kind of my way of doing it. And I'm like, I feel leverage Bitcoin exposure. There's kind of other ways to get it as opposed to MSTR, because you're dealing with like other risks on top of that kind of inherently come with management. So for me, it's just kind of like not my preferred trading vehicle, although it's I believe about to get added to the NASDAQ. So that's great. But yeah, certainly been one to watch, down another 20 points today. And oh my God, Broadcom just reported. And somebody asked me about this today on stream about like, what are your directional assumptions around Broadcom? And I said, well, I'd be like kind of bullish just because a lot of the concerns around chips, around AI, kind of more recent, I guess, when it comes to, these antitrust concerns around NVIDIA that was put forth by China, as well as some of like the more aggressive trade policies about raw materials that would affect like the semiconductor sector, specifically between that type of trade between, like China and the United States. Hi, babe. Oh, there we go. And I'm like, but you know what? That wouldn't affect their entire quarterly performance. So be kind of bullish. And of course, now it's up 30 points. And it's never when you actually have a trade on. It's never when you actually have skin in the game. Doesn't ever work out like that. But absolutely just shot. Oh my God, it's way over 200 right now. Okay, Broadcom.
And it looks like it's still moving at the moment. A lot of volatility in there.
Oh yeah. So that is a stonk if I've ever seen one, but I guess we got some time sort of before the open. And then Costco also reported this looks like a moderate donk.
I don't know. What did they do to their hot dogs? Yeah, what did they do?
They raised the price of their hot dogs. It's over. But that being said, Costco has just been like a beast this year. This has been just absolutely, especially since like October, November, just like on fire. So a little bit of a pullback is it's like it doesn't seem to be hurting it that much. It's also like not the biggest drop in the world.
I got you. What's the when's the next earnings for Costco?
They just reported today.
Oh,
I kind of was expecting more of a move compared to what we're seeing right now. It's down a couple bucks. But that's not really much. They reported, and then Surdizzle, thank you. I think the decision for MSTR joining the Nasdaq is tomorrow. I thought it was a done deal, so thank you for the correction. It sounds like it's not official yet. But the first thing I think of is like SMCI. It's like, it's up 1,000% this year. Let's have it join the S&P, and then immediately just sold right off. So in terms of like introducing some volatility to the indices, y'all. But what are you gonna do?
I mean, I wouldn't mind, personally for the sake of my account, I wouldn't mind if we have a type of a sell the news kind of event whenever that decision's officially made tomorrow, just because I do have some call spreads that I sold on the indices. So a little bit more of a down move would make me feel a little bit more comfortable. They're out of the money right now, but it's a little too close for comfort. So, I mean, I wouldn't mind a little bit of a sell the news event, at least temporarily for the next couple of days, for myself at least.
Yeah, I wouldn't mind that at all either. And I don't think anybody would be surprised if that happens. But that being said, we had some big movers, but overall in the market, like not a ton going on. Little tiny bit of a reversal, but like a 0.5% move in the S&P. That is like it's like well within a standard deviation. Standard deviation for SPY historical returns is like 1.1%, something like that. Qs, it's a bit higher. Russell down a little bit as well, and gold down, and bonds were down, which is like, that's kind of a weird day.
No, it is. You know what's funny? I know we were talking about quantum. We were talking about quantum computing a little bit more recently lately, and everything on my Twitter feed. I don't know if it's picking up what I'm saying over here, but I've been getting a lot more information on quantum computing. So even just the conversation on that topic seems to be getting a lot more popular and relevant. Little sidebar, but that's one thing I wanted to bring up too.
I can't wait.
I know you can. I know somehow you're pushing the quantum computing stuff on my feed, Julie. I know it's you.
Well, I just I just don't want to, kind of don't want to hear about it, because like we're decades away from it being, I think, really practically relevant. It's still in like very preliminary research phases, but there's still like huge amounts of capital from like major tech companies that are trying to drive hype around something that's still very, very premature. And so when it gets on that hype train, a lot of the discussions become like annoying a little bit. I think it's important for everybody to be excited about it, but that's not always the context that it's presented, especially when it's like really hyped up as one of these topics. So you can just kind of see, like, I don't want to say misinformation, but like, incorrect descriptions of it kind of propagate compared to when it comes from academia, which has its own other communication challenges, but that's beside the point. But anyway, what are you going to do? So I guess quantum computing, that's going to be the new, well, that is kind of what like ML was, like machine learning and AI was for a long time. It was like treated as this like very promising skeleton key to a lot of problems. And we're seeing like now that it can be applied to a ton of problems and can kind of like improve our ability to solve problems, not with like 100%, accuracy, but it's still, better than some of our existing methods. But it's certainly not a skeleton key that you can throw everything at. It's still like, you need a certain degree of nuance and literacy to be able to know, just like the internet, like, right? There's internet literacy that you need to build. Same with AI, say like quantum computing, like talking about it. That's a whole other thing.
Oh, but that's great comparisons. It helps us kind of build a little bit more context about the state of what it might be in right now. So
yeah, it's kind of this. I mean, I was very, very small during the early internet days, but I anticipate that a lot of the concerns around AI are very much echoed. They echo the concerns around people adopting the internet and the World Wide Web and this like endless supply of information kind of at your fingertips. And like, right, there's a certain degree of literacy that you need to be able to use the tool effectively, and to not get like scammed or hurt or, you know, learn how to take in all that information. So likewise, there's a certain degree of literacy I think that comes with using AI tools effectively. We as traders maybe have seen some examples of illiteracy even just since ChatGPT came out.
100%, 100%.
But we're here to learn. And that's what it's all for, isn't it?
But it kind of
yeah.
seems like a space right now, just because there's going to be a massive barrier for entry in terms of even whatever does quantum computing becomes more so relevant within society and solving issues. It seems like there's going to be a pretty big barrier just because that type of technology seems like to be extremely expensive. So maybe right now it's also in a state of like a lot of speculation, investing, maybe a lot of
100%.
venture fund, a lot of speculation for at least trying to get a piece of the pie without actually having the real thing. But we'll see what happens.
Yeah, it still seems like pretty preemptive. And like once quantum like technology becomes like quantum computing technology, quantum communication technology, once that becomes like commercially viable, like there's, in terms of priorities, like there's a lot of, I think, change that our existing like security infrastructure needs to have in order to be not vulnerable to those types of attacks. So that's going to be, do you remember the Pope drip?
Can you remind me?
Did you ever see that? It was a picture of the Pope wearing this like blinged out necklace and this big puffy coat, and I thought it was real. And then it turned out to be AI. You remember we talked about that?
The literal Pope drip. Yeah, I remember exactly what
the Pope drip. That was like a scare, right? That was like, for me at least, I think for a lot of people, I didn't know it was AI generated. Found out it was AI generated, and that was like a scare, like, oh, we really got to get our shit together figuring out how to regulate this and how to how to use this properly. So I believe that to be the same when it comes to like quantum computing technology and all that kind of stuff. Like there's gonna there's gonna be some kind of like, oh, this is really a real thing now. We have to get our shit together sort of event.
That's a really good point. And even with quantum computing, maybe that'll make a little bit more of an argument with why, you know, blockchain could be relevant, because I know, especially with the new age of AI and being able to tell what's real and what's fake, I know the blockchain is something that's going to be like a public ledger that can help us identify what's real, what's not real, what's legitimate, what's not legitimate. So maybe with even quantum computing and the coming of AI, maybe it'll make more of a case for why something like blockchain could be useful.
Yeah, I think so too, actually. I mean, and I'm not like super involved in the space, obviously, but to me, intuitively, that just seems like a great application for blockchain, because you have like this publicly available, like mathematically verifiable trace of where something came from. So if you're concerned about deepfakes or, you know, like fake information or any of that kind of stuff, and there are like reputable news sources where you can trust the information coming from, that's potentially a way to create like an algorithmically verifiable trace to certain types of information. That being said, if the information kind of branches off in a ton of different directions, it doesn't necessarily mean that what you're seeing now is like false if it didn't come from one of those news sources, but at least gives potentially people the ability to point to something and say, like, I can actually track down where this came from, and it's got a timestamp, and that's kind of like etched into this big shared thing that we all agree upon. And to me, that seems like, I think, one of the coolest applications for blockchain technology. I think that'd be cool.
Good point.
So what are you going to do? I think I know what we're going to do, actually. You want to hop into some trivia?
Yeah, let's do it. I know we got some slides before that if you want to get into some of these updates as well.
Let's do it. Are you able to see that okay?
Yeah, perfect.
Hell to the yeah. Okay, so first things first, we do have an app. We made some sick updates this week. We added market cap distribution. We added events to your portfolio page and some accessibility updates. If you want to go find it, you find it in the App Store and the Google Play Store. It is a fun community on there. And then as well, if you want to come throw your trivia answers into a chat, you can find us on Tastylive's YouTube channel at Tastylive Show. And if you want to follow us on Twitter, we're at BatTraderApp. It's pretty cool information that Luis finds to put up on there. So super, super duper cool. So all-time highs. That's the topic?
The themes. Yeah, all-time highs. That's what we'll get into today. We have a couple of trivia questions. So cool.
Let's do it.
All right. What percentage of the time does false breakouts occur at all-time highs in the NASDAQ composite? We got 4 options. We have A, 10%, B, 20, C, 30, D, 40, and then I'm gonna just throw in the E, all of the above. Which one are we thinking, chat? I know we've spoke about this almost very similar question. It's almost just flipped upside down now, but I thought I would present it this way.
Okay, so for all the uneducated swine out there who Just so that I know what a breakout is. Like you're talking about, like it's like I'm going to try to use my technical analysis. I think I've been around Luis enough. So something's trading in a channel, and then it pops, and then continues.
It doesn't even have to look like. It doesn't have to look like anything. All that it would be meaning is making another all-time high, whether that's a channel, whether that's whatever it looks like, just all-time high.
So what you're saying is that like a false breakout would be like the NASDAQ hits all-time highs, but then that all-time high doesn't continue. It just kind of sells back off.
Right.
Oh, okay. Gotcha. So basically once we're at all-time highs, how often does it reverse?
Right.
Yeah. Okay. There we go. Ooh. Oh, you know what? I actually know this one. I think approximately.
You see how I'm saying it's kind of flipped upside down from how we would usually propose the question.
Well, because I calculated this a while back, given that we're at all-time highs today, what's the probability that we're going to continue to hit all-time highs for tomorrow?
Right.
And I know, so there's a complementary probability of that. So I think I do actually know this one.
Yeah, 100%.
Hell yeah.
What are we thinking, chat?
Okay. All right, chat. What are we thinking? It looks like absolute beginner says A. Big Deal Donut said E. Not even an answer. I think you got that one.
All the above is E. Yeah.
All the above is E. Yeah. That's a good question. Okay, so everybody go ahead, take a second to throw your answers over in chat. I'm going to go ahead and give mine because I do remember these probabilities. Is it C? Is it 30%? Because I remember 70% is the complementary one.
Exactly. Yeah, so C answers 30%. Fun fact, false breakouts occur often during low volatility or in highly speculative markets. And speculation tends to rise, especially at all-time highs, because we've never traded at those prices before. But yeah, it is kind of, I really tried to just flip what we usually talk about upside down. So the inverse, like you kind of said, would be 30% rather than the likelihood of putting in another all-time high, which would be 70%.
There you go. Yeah. See, pretty cool, actually. I dig this. And we're learning a little bit about some of the jargon, breakout jargon today. Super cool. Nobody in chat got it right, but 30% is actually maybe it's a bit higher than chat thought. They thought it was 10%.
I did hear 10%.
Is the most common answer. Yeah, there you go. Yeah. Okay, what's the next one we got?
Awesome. So why are all-time highs considered areas of price discovery? I know this is a little different than what we usually get into, but we do talk a lot about
technical analysis.
Oh, no technical analysis.
This is not technical.
No, auction. It's technically under the eyes of auction market theory and where buyers and sellers will typically find value. So we talk a lot about it. We talk a lot about it on stream. I know it says, I only use the terms resistance levels because it's just the common term that I think most people will recognize. But that's why we also have like resistance in there as well. But just kind of wanted to throw that in there. We talk a lot about it on stream, but why are all-time highs considered areas of price discovery? We have A, there's no historical resistance at these levels. B, traders rely on historical support levels. C, market participants avoid trading these levels. And D, volume is always lower at these levels. What do you think it might be, chat?
According to the auction price theory.
Auction market, yeah.
Auction market price, yeah. Auction market theory. Why are all-time highs considered areas of price discovery? All right, chat, what do we think? It looks like there's a lot of A's. We got A's.
Okay.
Seems to be the most common answer. Again, there's no historical resistance at these levels. That kind of makes sense. Traders rely on historical support levels, not resistance. So I'm thinking of, but they're.
I guess the real term, The real term would be value areas. I just wanted to use resistance because it's a more common phrase used that people could pick up on. I don't want to use terms that people are like, what does that mean? Yeah.
And then we got a whole bunch of people, Metaphysics Magic, that's awesome. Bunch of people saying A as well. I'm kind of inclined to agree because I don't know why you would avoid trading at these levels or why there would be lower volume levels. I feel like volume would be pretty consistent.
We also have option E,
But there is also option E, which is none of the above. Okay, well, you know what? I've learned my lesson once or twice to go against chat, and I'm not going to do it. Is the answer A?
You're trading the statistics of chat. Yeah, the answer is A. There's no historical resistance level. Really, it would the correct term would be value areas because price typically likes to seek value, and whenever that is happening, we usually coin that price discovery. But price discovery allows the market to test new areas of demand supply without predefined barriers. Supply and demand, same thing as value. Again, I just thought I'd use terms that are a little bit more popular and recognizable.
Hell yeah. Super cool, man. Well, chat got it right. Good job, everybody. Y'all know your support resistance market theory, auction market theory. Hell yeah. That was a fun one.
Cool.
I think that's the end of our trivia, right?
Yeah, that'll be it for today. You know, I was like, let me just throw in some couple all-time highs. I know we did Santa Rally, you know, we've done Thanksgiving thing, and hopefully this is the top. You know, famous last words, but we'll see what we get heading into the end of the year. So
I dig it. Yeah, no, I feel like I'm learning a lot from these trivias these days. Do you want to try to do a tradle?
we got 3 minutes. We could get a hole in one.
I think we can get a 3-minute tradle in.
Even a birdie or maybe an eagle. We'll see what we get.
I know golf terms. I did golf.
I almost forgot what the second one was.
I forgot what all of those were, but I did do golf. So let's try to get through this. We got 3 minutes. If anybody in chat has never played with us before, we like to play this game called Tradle, which is very similar to Wordle. We're basically given the export distribution of a country, and we have to guess which country it is. So this country, for example, has $206 million in exports. Recreational boats makes up a whole lot of it. We got some refined petroleum, diamonds, asphalt mixtures. And so basically we're going to give a guess, and then it's going to tell us basically how close we are to the target country and what direction the target country's in. So do you know anybody that makes an awful lot of recreational boats? I assume they're on the coast.
206 million in exports.
It's a little small, yeah. It's a little small, hard liquor, magnesium. Okay, so we got, and diamonds too, 5% diamonds.
That's a decent chunk. Okay.
That's a decent chunk of the diamonds.
Asphalt mixtures, refined petroleum, diamonds. Okay.
South Africa does a lot of diamonds. They're on the coast, but I feel like they'd be bigger than 206 million, right?
Yeah, this is really small. I would think as well. But it's not a bad start to give us at least a reference point.
Well, I would say it's like maybe not a great start because everything else is going to be really far away from it. But why not? Let's just do South Africa. South Africa. Okay, so we're nowhere near the target country. South Africa. Well, we got a point on the board. So we're 46% of the way there. The target country is 10,000 kilometers to the northeast, and it's to the northeast. So that's what that little arrow means right there. Metaphysics Magic said Morocco. Does Morocco do gold? I think they might actually do gold.
Morocco would have been a better guess than South Africa, to be honest.
I feel like Morocco does. They also don't they do phosphorus or something, or sulfur, something like that.
Do they do sulfur? I don't like the smell of sulfur.
Hard liquor in there as well. So I don't know if we got Jamaica, we got Venezuela, Maldives. I think so. I'm trying South Africa. So it's either on the northeastern side of Africa, or it's all the way up in North America. So it could be like Iceland or something, especially with the refined petroleum. It could be like Greenland, Iceland. It could be like Norway, actually, but I feel like Norway would be a lot bigger. What do you think, E?
I mean, I'm Jamaican, so,
Italy?
you know, Italy's not a bad, Italy's pretty small, but I feel like the exports is not that small.
I'd expect it to be bigger, and I'd also expect maybe like leather or more like textiles, that kind of stuff. Russian Federation countries. It could be one of the Russian Federation countries. Now I'm trying to remember my geography. We had Morocco's a good guess. I think Morocco could be interesting because that's up there in like northern Africa.
Yeah, that's
want to try it? Well, it could also be Jamaica. We can try. I mean, do you want to do Jamaica? How much
we
do
could
they do
try.
diamonds?
I've never known Jamaica would have been about 5.5% diamond. That's the only thing that's throwing me off.
Oh my God, we're actually really close. Okay.
Okay.
Jamaica was a great guess. We got closer. So now we're 93% of the way there, and we're 1,300 kilometers away, and it's like pretty much straight east.
To the west. Oh, east.
To the east. Sorry,
East,
I mixed up
my
east and west earlier. It's supposed to be the northwest. I'm sorry about that.
Gotcha.
Yes. Recreational boats. Could it be like I'm trying to remember what Jamaica is. Could it be like the Dominican Republic or something?
Oh, that's right there.
It's right there, right?
I forget which side it's on, but I believe it's right there.
Because
I mean, I'm pretty. Yeah.
That was a very good guess, though. People in chat. Do you want to try the Dominican Republic?
Yeah, let's do it.
Diamonds are only in a few areas of the world. That's right, Donna. So I'm like, there's got to be like I don't know the. I'm also trying to remember.
Diamonds are throwing me off really bad.
Right?
Yeah.
Let's try that. Oh, we're really close.
What in the world? What's that?
Haiti?
What's that? Let's do it. Let's start.
Try Haiti?
Yeah.
Let's do it. Damn. Okay, never mind.
Oh my gosh, that's still a good guess.
I always get mixed up which side the Dominican Republic's on versus Haiti. Okay, what is like right next to the Dominican Republic and Haiti? Crap. Is it Cuba? Could it be Cuba?
Cuba's right there.
You want to try Cuba?
Let's do it.
Puerto Rico? Haiti or Cuba? Let's try Cuba.
I
and
say
then
Cuba first. Yeah, let's do Cuba.
Once you get to like 95+% of the way there, it's a complete crapshoot. Okay, it is not Cuba.
Oh my goodness. Okay.
Well, we got one more guess.
Ooh. We got a strikeout.
Puerto Rico. I think they split up U.S. territories with like U.S. continental states. So let's do, you know what? We're just going to do Puerto Rico.
Okay, let's send it.
There's a good, wait, how can I spell today?
Ooh,
Thank
there
you.
we go.
Jesus. Wait.
What were you thinking? What was
It's the
it?
British Virgin Islands is the correct answer.
Oh,
Which I here's the thing though. We got 99% of the way there. I don't think we could have gotten any closer without
honestly,
getting it right.
if we didn't do South Africa first and we did Jamaica or something, I feel like we would have said Virgin Islands at least for the last one. I don't know, but we got.
I don't know
close.
if I would have said Virgin Islands. I wouldn't have thought of it,
Yeah.
but I guess with 200 million in exports, like that makes sense. But whoever said Puerto Rico, I think German said it the first, I believe. So I think we got pretty. I think that's pretty good. I don't think
Yeah, I
that's
mean,
too bad.
56% recreational boats. I mean,
Yeah.
I don't know why we did South Africa first with 56% recreational boats, but anyways,
I
that
think
was
it
a
was
fun
the
one.
diamonds. Like, there's not a lot of
Yeah.
places that make that produce diamonds. So
Yeah,
now we
that's
know.
true.
I guess U.S. Virgin Islands do some diamonds.
That's true.
That was
That's true.
boneless. That's for sure. Big deal donuts. I said England. Does that count? I mean, actually, well, you know what? I think that's the perfect place to leave it. We're a little bit over. But that was a fun one. We had a whole lot of chat participation, guys. So thank you so much for giving us some great ideas. I think we did pretty good, pretty well, all things considered.
I mean, 90% besides for one, but yeah, it was a fun. It was
99% of the way there is pretty good. E, is there anything that you want to leave on before we get out of here?
No, that'll be it. That was fun. Thanks for taking the time to hang out with us, and that'll be it for me.
Yep, had a great time, everybody in chat. Thank you for joining us. We're going to catch you guys next Tuesday. Can't wait to try to trade till then. So everybody, good luck trading. Be careful out there, and may the rest of your week be green. Peace.
Peace.
Yeah, it is Thursday, December 12th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth with your host, Victor Jones. It's a little show where we like to explore the incentives that govern our world. It is Thursday, people, so I am rocking solo. So shout out to everybody watching on tastylive.com. Shout out to all you savages watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, the screen names and the running chat, all that stuff that they're situating somewhere along your screens. There's only one place to do it, and that's on Tasty Live YouTube channel. So head on over there, type in Tasty Live, find the live, and jump in. And start typing in random-ass characters. Tell us whether you made money, you lost money. If Broadcom's little pop of 13% is good for you. If you had a binary position on, tell us whether you think, tell us what you think about the quantum computing breakthroughs that we've seen in error rates over the last week. Tell us what you think about that. Tell us anything. The point is to be as active in the chat as possible so we spoof the Google algorithm into putting this show and this stream in front of as many people as possible. Speaking of the people, we should say what's up to the people. Shout out to everybody in the chat. No idea where this thing starts, so I will just say what's up. Lone, Big Deal, Dave S., Absolute Beginner, Donna, I see you as well, Metaphysics, Paul McAvoy, German, and so many more. I want to say what's up to all of you. Quantum computing equals trash. Oh, that's so funny. I didn't get. I don't want to do it. I don't really get what the new breakthrough was. I watched a video like a month ago of a woman that I follow, a scientist who explains. I don't call them complicated, but quasi-complicated developments that are happening in science. And she explained Google's breakthrough and error rate back then. So I don't actually know what was news. I don't know. Some part of me is just some big cynic that says whenever this AI hype train slows down, they just throw some red meat at the wolves to keep you chomping at the bit, buying up anything smoking. More on that later. Gold $50 drop today, was a little surprise. Bought that dip via GLDM. We'll talk about that. Look at you, CT, longtime lurker, first time to comment. Love the show. I love you, and I mean that. That's not some, I'm not just giving out some pleasantry. I mean, I'm looking at you, CT, and if I could play some slow R&B jam right now and tell you just how much I love you, I would. But I'm contractually obligated to say meaningful things about the market. So I guess more on that later. Let's talk what happened in the market today. My babies, the NASDAQ cash was down 2/3 of 1%. Dow Jones down 0.5%. Russell down 1 1/3, and the S&P down 0.5%. But even in red, it seems like they continue. Even a red day doesn't feel like a red day anymore. You feel me? Do you understand what I'm saying? I guess it depends on how leveraged you were to the downside, but we just flirted with 21,820 in the NASDAQ. The valuation gap between U.S. markets and the rest of the world, the MSCI rest of the world index, has never been higher. Valuations have never been higher. And I know they tell me all the time, Victor, you're a trader. You shouldn't be talking about or worrying about valuations as much as you do, because that matters in the long term. What's that quote? In the short term, the markets are a voting machine, and in the long term, they're a weighing machine. In the short term, it's all about supply and demand. How many people want shares versus how many people are selling them. And if there's an imbalance there, price goes up. Doesn't matter what your fair value is on an asset. It's supply and demand in the short term. And I get that. But at some point, who is the incremental buyer? And typically that's why you see a two-sided action in a marketplace, because you need to go find a position, find a value, find a price where you have a new incremental buyer. And I guess the passive bid from all your 401ks, as long as nobody's getting laid off or it's happening slowly, and I get the claims ticked up today, more on that in a bit. But as long as you guys are all contributing through your 401ks, that passive bid in the market is a monster of an MFer. And that's, I think, what anyone like me, who's crazy enough to try to fade this little window between now and expiration in December, when everybody's all bulled up on Santa Claus rally and seasonal trends. I don't know. I got something in my claw, and I just had to go try to fade this thing. And now I'm coming in here every day a little bit angry, and you can tell why. But if they could roll this, thing 3 to 5%, I'd be a very happy man going into. I guess it's not Turkey Day, the holiday, Christmas, Kwanzaa, Hanukkah, whatever you celebrate. E-mini S&P 60.63, so off those 60.85 numbers that we just saw a few days ago. 21.7 in the NASDAQ futures, my babies. 44.3 in the Dow, Grandpa's favorite index, and the Russell down 23.60. And the movement here, if I may say so myself, Cato Prime saying sell the NQ. Famous last words, my man. I like it. You want to come stand over here with me? I feel like I'm in the movie Braveheart. I've got blue paint all over my face, and I'm just saying, hold. They're charging at me full speed, and I'm just, hold. That's how I feel right now. Am I scared? A little bit. Do I think it's going to work out? I'm not as confident as when I showed up to the battlefield. I'm not going to lie to you. But I do think sometimes this game is about pot odds. And do I have some aspect of my account that's always long only? Sure. And the trader in me would love to see the pot odds of a left. I keep saying this, but this low volatility regime seems to me that you've got a right distributed distribution curve. What that effectively means, without using fancy words to name that type of distribution curve, is that you have a higher probability of a grind higher, a higher probability of higher prices, but the expected value of that distribution curve doesn't change, and it's offset to account for that higher probability of higher prices with a fatter left tail. And I think that's sort of the environment that we're in. VIX at super low. I don't want to say super low, right? I guess, in my personal opinion, VIX low at 1392. Not much the market is worried about going into the tail end of this month. Perhaps, they'll start worrying about taxes, stuff like that in the first quarter. But from the market's perspective, regardless of geopolitical tensions, regardless of a lame duck president, regardless of a new administration who seems to want a little bit of smoke when it comes to bilateral, multilateral trade negotiations, all of that seems to be taken in stride because of the growth narrative we're painting. We're painting the growth narrative, the extension of the Trump tax cuts, the lower corporate tax rates, the intention of keeping GDP growing at 3% instead of the long-term trend at 2%. All of that seems to be priced in, but the question becomes, at what point is the good news priced in to its full extent? At what point does an incremental dollar already have the positivity of the next 9 to 12 months already priced in? And maybe we're nowhere close. I have no idea. At 6,100, maybe we're nowhere close. A lot of the street thinks that 6,600, they're basically all bunched in their 2025 estimates between 6,600 and about 7,000, somewhere between there. So it's a 400-point range. So let's call the average about 6,800, 6,850. Do you want to know what Vol's telling you? Do the math. Take that 13 VIX, apply it to the 6,100 or 66. You're going to get somewhere in the ballpark of 6,650. So you don't really need all those fancy 2025 outlooks to try to figure out what a reasonable expectation of upside is going to be. The only problem with all those fancy reports is nobody gives you a reasonable expectation of downside risk, and Vol does that because it is a two-way mechanism. Live by the vol, die by the vol, my friends. 1392, far below the long-term average in volatility, somewhere at 17 or 18, if I'm not mistaken. 2 years, I think it was 2 years ago, I could not understand, Vince K, what's going on, Paul McAvoy, and if housing picks up next month. Yeah, mortgage rates tick down. I think I saw them at 6.6%, something of that nature. And the sentiment, the buyer sentiment, is starting to roll over as well, starting to look a little bit more positive. So those two things could happen, man. And if those two things happen, you get people buying washing machines again. You get people buying, carpet, getting people in the house, working on the house. That's a big part of, driving purchases in the economy. We've been missing that as the housing market's been locked. It's possible, but some part of me continues to see, some part of me wonders, when we saw a higher inflation rate, what was that, yesterday? All the days blend together. We saw a higher PPI this morning, 3%. Okay, we saw a higher PPI, not by a little, but by a lot. Let me pull this up for you guys, just in case you didn't see it. I'm sure you did, but just in case you did not. Vol underestimates the downside, in my humble opinion, because once it starts to slide, Vol explodes. Kind of. I don't disagree, but skew is built into the market post 1987 for that exact reason. But I would say vol in general tends to be a little bit overstated. I do see what you're saying, though. I do see what you're saying. Anyways, the PPI actual on a month-over-month basis, 0.4% was the actual versus the expected at 0.3%. Year over year, big damn deal. 3% versus the 2.6% expected, and the prior number was 2.2%. So there is no more hiding from the reacceleration of inflation. The only question is, how high does this go? How long does it take producers to pass this these price inputs. PPI is seen as a little bit more of a leading indicator versus CPI, which is a lagging indicator. PPI indicating what producers are paying, which likely means what they are going to pass down onto the consumer later. If they had to pay a higher price in the purchasing of their products, the likely next step is to pass those things down to the consumer, which means the expectation is later on a higher CPI that these costs are passed down. But even on the core, 0.2% came in at a consensus, but on a year-over-year basis, 3.4 versus 3.2%. My thought process coming into this week, sometimes I just think the opposite of what is easy will happen. Sometimes that works out. Sometimes it's more simple. So in my mind, and I even read a couple of reports that warmer inflation data will take yields higher. And I thought that's not nuanced enough. This is, I'm explaining to you why I'm wrong. I felt smart at the time, but I'm explaining to you why I was wrong. I thought coming into this week, a warmer than expected inflation print would result in two things. I thought it would result in a slightly higher front end of the yield curve. In other words, I thought the 2-year would stay high and maybe even lift a little bit. What is that really saying? What that's saying is that if we got warmer inflation prints this month, what was the effect is that the market would take out some of the Fed's ability to cut, their expectations for the Fed to cut in the short term. And the 2-year tends to be this representation, this market representation of Fed expectations. So if the short end floats higher, what they're effectively telling you is over the next 2 years, within the next 2 years, there's a lower expectation that the Fed would move rates lower. After CPI, in a way, we saw that. I'm going to show you why that is. We were something at like 88% of a cut this week. We've moved up to 96, 97%. So they cemented the December cut, but that's not the entirety of the story. What's also true is coming into this week, we had about 3 additional cuts priced in to 2025. There was one in March, there was one in June, and then effectively there was one between October and December. But that one was a lower probability and the timing was less clear. And what had happened after CPI, they took out the probabilities, or they took down the probabilities of that third cut. And today, with the higher PPI, they threw it out. They threw it out completely. So your probabilities of 2025, the amount of cuts that have been priced in at this point is basically 2. And that sort of makes sense. Where are we in terms of Fed funds rate target? We're at 450 to 475. Take out 2 cuts, and you are 4 to 4.25. What is your 2-year? Your 2-year is currently 4.165. It's literally in the middle of that range, between 4 and 4.25. I could go look at SOFR futures or Fed funds futures, all that stuff, but as a nice back of the napkin for us traders, you can just look at the 2-year and go, the market took out a lot of those cuts and is expecting over the next couple of years a range between 4 and 4.25. So that's kind of what I would be expecting for next week, which is the 18th. The Federal Reserve will put out their expectations for what they're going to do in 2025. But I kind of think the work's already been done for you. And I think that's what happened in the marketplace today. But what I thought, because the market has done so much work to raise the short term, that perhaps that may be giving more confidence to the long end of the market. And maybe you would see a little bit of buying in the long end, and maybe you would even see an inverted yield curve. But the market's not ready to do that. And the market is dragging the long end of the curve up with it. So we are, the market is not looking like it wants to invert in any way, shape, or form. So ZB has sold off of that 120 level into 117, into this digestion range here. It's sold off deeply into it. So it looks like the yield curve is going to stay positive It wants to stay positive. It's going to stay positive. The difference between the 10 and the 2 coming into the day was about 14 basis points. So the 10-year, what should happen over time, your longer tenor should be trading with higher yield because there's more risk that something happens over a 10-year period to the payback of your money versus 2 years. You loan somebody money, things can happen within 2 years where they don't pay it back or the money's not worth as much. 10 years, there's a higher probability something goes wrong, so typically you demand more risk for those longer dated maturities. I know most of you know that stuff, but just in case. So you're seeing the 10 years trading with only 14 basis points more built in, but it is positive nonetheless, and it doesn't seem to want to reinvert, which means you sort of got to respect the 2-year here. I try to get cute and think we might see a reinversion. It doesn't seem like the market wants to do that. It seems like the market wants to keep yields positive. And if that's the case, the long-term trend between the 2 and the 10-year is 100 basis points. I saw Ophir Gottlieb post something on this today. The long-term difference between the 2-year and the 10-year is about 100 basis points. So if the 2-year right now is trading at 4.165, the long-term averages would say the 10-year should be somewhere in the neighborhood of 5%. That you should see an additional 100 basis points for the yield of that 10-year. And I've maintained that I do think that is in the cards. I think the path of least resistance for 2025 is a 5% yield. But I did think that they would, I thought bonds would do a little bit more work to the upside here. But I guess we're in this range. And I'm going to trade the range unless it's violated, right? You trade between 115.5 to 118.5 was this established range. We did a little peekaboo above the range. The question is whether we'll establish a higher low or a lower low here. I'd still like to play for the higher low. For some reason, I think it's not going to be that easy. Bonds don't move in a straight line. But the market may make a fool out of me here. It may, we may be trading at 114 in the next 2 weeks, and I'll say, well, I didn't get that one right. But we'll see what happens here. And you can see that this kind of range that it was trading in, we saw that back in mid-year as well. The same exact range between 115 and let's call it 120. We're doing something similar now. And I'm going to play that range. We'll see what happens. Paul McAvoy says, me too, play it higher. That's what I'm doing, my friend. I could totally be wrong. And again, it's a weird sort of thing because I'm playing the counter trend. I'm playing a long bond position, even though I think over a 12-month period, I think the steepener works. I think we steepen, and I think that 10-year probably is at 5% as we steepen. Let's see what some of you guys are saying. I'll stop. Let's read the chat for a second, react to the chat, and then we'll get going. We got a ton of topics today. The 10-year 3-month is almost positive. That's right, absolute beginner. And my man who did all of the work, this is the thing about all these signals, right? So they come up with a SOM rule. The SOM rule's violated. They get Claudia Somm to come on television, tell everybody it's different this time. I believe our good friend, I'm blanking on the name, the person who came up with the 10-year 3-month rule as being the most important of the yield curve inversions to look at, I think is also being paraded around saying the same thing. I think I read in an article, it's different this time. Everybody, it's different this time. Daniel Marquardt, overvaluation is concentrated to select stocks, but not to the broader index. Daniel, I would agree with that. But here's the problem. Not with that thinking, because I have that same type of thinking. I would agree with you 100%. You take out 7 stocks, you go, what's the value of the market? And you get something that's like sort of a normal valuation range. It's not low. I think it's like 18. So right now we're trading, I think, at a 22 or 23 forward multiple. You take out those 7 stocks or whatever, I think you're in the ballpark of like 18, 19, which is in the 5-year, 10-year average. It's a little bit warm, but it's not crazy. I hear you. But the problem with that is So my trade construction is to buy the rest. So what I'm trying to do is be long the market, short concentration. In a way, that's how I've structured my portfolio. And if what you were saying is true, what could happen at some point is a normalization. And what could happen is either those concentrated, overvalued, or expensive stocks in terms of valuation come down and meet the rest of the market, or those cheap stocks by valuation come up and meet those other concentrated names. But that's not happening right now, right? That broadening of the rally to an extent is not happening at the index level. It may be happening, you're getting like these big spikes in stocks, Broadcom today moving up by 10, 13, 15% in the extended hours. You can look at it here. But, ended the day at 180. Now we're 207. So you're getting these massive reactions on stocks, big pops. But at the index level, you're not seeing the other indices catch up to the extent with where the NASDAQ value is. And that's where all that those concentrated positions are most represented. So I think you're right. I also agree. But what's the saying? Markets can stay irrational longer than we can stay solvent. And I'm not necessarily saying that stocks are expensive. At the beginning of a cycle, I've said this before, I said this to Chris, at the beginning of a cycle, you get high valuations, and then an economy grows into its valuations typically. They might be a little overextended, but what the market is doing is trying to forecast or discount out into the next 9 to 12 months. And in the next 9 to 12 months, the market has a very high expectations for earnings growth. And now they're expensive, but if you see the market grow into that earnings multiple, you'll see the price can go up, but its value can come down. That's why you can't put all the eggs in one valuation basket. Anyways, my point is, Daniel, I totally agree with the point of view I have a position on that would benefit from the normalization of price and value between the concentrated stocks and those that are not concentrated. Just taking some time. If I've constructed it correctly. That's always, perhaps I've constructed the trade incorrectly. It's not the easiest thing to put on. I guess I made it complicated. It is easy to put on if you use simple instruments. Sterling Ruffin says, you want to see vol spike, let the Fed wake up next week and do the right thing, not cut rates into this higher inflation environment. Sterling, why are we the only people who are reasonable? Why are we the only? That seems like the most reasonable thing anyone could say, which is on a 3% PPI, right? On 2.6, 2.7% year over year consumer inflation levels. We're cutting into that. I don't get why the public is not furious. I don't get why they're not furious. Because unemployment's still going up. Jobs claims today, it's still going up. People are still not, this isn't a great, environment for job hunters. And that's keeping a lid on wage suppression. I don't know why people are not pissed. Maybe there's enough people that go, well, if they cut rates enough, maybe I can get a house. Yeah, maybe you can, and it'll be 20% more expensive when you can get into it. Congratulations, you played yourself. Jobless claims, 242,000 is the actual versus the consensus at 220,000. And 220 is kind of where we've been at. If you can see it here, the 4-week moving average, 218,000. So the expectation was just a status quo number. And you can see there's a pretty big jump between that status quo number, which also moved up the 4-week moving average. Stuff not great, but it's a weird thing. Here's the weird thing. If companies are figuring out how to do more with less, if a lot of the consumptive power has moved up from the bottom 50% to the top 50%, if that top portion of the economy is accounting for 80% of the spending in the economy, then maybe losing jobs is not going to have, it's not going to have a down, as negative an impact on the economy as one might normally expect, given the concentration of wealth. That's a weird thing to say. And so as you see unemployment tick up, what you're really seeing is corporate efficiency and margins, corporate profitability move higher, and not necessarily consumptive power of the economy going down or offsetting that equally. That's the weird thing to say. But somebody must say it. It seems like that's how the market is pricing this. But unemployment rate at what? Where did we end last week? I think we ticked up to 4.2%, if I'm not mistaken. Fed's initial expectations for 2024 was 4.4%. Inflation at 2.6, 2.3 headline and 2.6 core, with a Fed funds rate at 4.4%, which is about where we are, right? We're 440 to 475. They probably got one less cut off than they thought, but we're going to end up doing it in a week, which I cannot believe. Jack Murphy Live says most people won't short. I think that's true, and that's probably a good thing, Jack. I think shorting, shorting tends to be something people think about as binary. And I think when I thought about shorting as binary, usually it was a losing proposition for me because it's really, really hard to time. When I started thinking about shorting as just a basis trade, like I want to be net long these instruments and I want to be net short these instruments, and really what I'm looking for is either the market can go up, but my longs are going to do better than my shorts, or market can go down and my shorts are going to do better than my longs. I'm looking for a basis convergence. When I started thinking about shorting that way, I started to have a higher probability of success. And most of the time I keep net long deltas. And so that sort of increased the probability of success for me. And I started thinking about shorting in a more nuanced way. But yeah, I do think if you do this long enough and you're not, why not be I wouldn't be afraid of the two directions in the market. Just depends on your activity level. Cato Prime says, markets are nuts. Markets are nuts. Housing, credit, debt, wage growth is telling a different story. I'm with you, Cato. But here's the thing, man. I also know that this late part of the cycle, which I believe we're in, it can be the dumbest. It can be whatever you think is crazy, multiply it by 2. And that's why this part of the cycle becomes really hard to fade, because you get Fartcoin going up and now it's worth $560 million, which is worth more than 1 out of 3 publicly listed companies. That's the kind of stupidness you're in. And the Fed is cutting into that. So I'd be careful. I agree with you. It seems a little nuts. But sometimes, like in 2022, I think what was hard for people to realize is we were in an environment, we were leaving an environment and we were going into a new one. We were going into a new environment with higher cost of capital. And that changes the game on how everything had worked, right? Your Ubers are not going to be subsidized with cheap money anymore. The prices were going to go up. Your food deliveries, restaurants, your small business labor costs in your small businesses, all of this stuff was about to change. And the market saw it and was discounting it, but people couldn't see that future. There's a part of me that goes, the market is nuts today, but what about the next 9 months? Am I potentially not able to see that the market is projecting? What is different about that world? And because I always take it back, there were so many people that could see what that new world was back in 2022. They couldn't imagine a cost of capital and what that would do to asset prices, what that would do to certain businesses and industries, what that would do to labor costs. But I wonder if we're in the reverse of that right now. I don't think so. When people are saying that the business cycle is over, to me, I'm like, all right. All right, you guys have lost it. But there's some part of us as risk managers that have to remain humble to the idea that we may be on the wrong side of a two-sided market. And I'm always humble to Mr. Market. So we talked about bond position. I have nothing on. I don't have the steepener on yet, though I'm guessing at 119, hindsight's 2020, but the best time to put this on was when we ticked at 120. The steepener would have been the best thing to put on. I think the difference between the 2s and the 10s was only 2 basis points back then. Now it's like 15. We've already widened up. That trade would be a 13 basis point winner. Again, hindsight's 2020. I'm still playing the long side of bonds. If I get lucky, I'll look to exit that long bond position. I don't know, maybe 122-ish levels, scale down, and then put on the steepener. But I don't know if I'll get that second chance. We shall see, my babies. For a second, I talked about this morning. I talked about it a little bit over the last couple of days. I want to bring it up now. I want to get your guys' opinion. Speaking of concentrated, the day after Ryan sells his fork coin at Rockets, he was long. Of course he was. All right, let me read a few more. You have to outbid BlackRock. Good luck with that. You're talking about houses, I'm guessing. VJ, is your portfolio at a high watermark? No, it was going into last week. So I think the middle part of last week was a high watermark. And but I've given back some in the last couple of days. But I also have more variance on. So I have basically what that means. I have more futures options on right now, and when I do this, I get bigger swings in my P&L. So there's a way that I'll have on long stocks, and I'll hedge out some of that risk with short futures, and that's basically has very little variance to it. But then whenever I think I know something, who asked that question? Oh, Jack Murphy. Whenever I think I know something, then I'll put on a little bit more directional exposure, and the portfolio will have a lot more variance. So I hit it last week and pulled back over the last, 6 trading sessions. That's the way it happens for me. I'm going to hit a high watermark usually when the market's contracting on everybody else. They're going to hit it as markets are hitting new highs. People in general are lulled into complacency by the holidays and their fear of missing out on the next NVIDIA rally. What do you think? Is the quantum supercomputer from Google, is that the NVIDIA killer? This has been a zero-sum game, this whole AI narrative. It's like NVIDIA's getting all of the capital expenditure from businesses through one way or another. All that spend was effectively going to really one company. Maybe Taiwan Semiconductor by extension and a handful of others, but the lion's share of that capital expenditure was going to one place. How many of you Googled septillion this week? I don't know. Is that a math joke? I don't think it is. But my point is, this thing could, just for anyone that doesn't get the horrible reference, it's not even a funny joke. This thing can do problem solving in 5 minutes that would take linear computing septillion of years. And so the joke, if you have to explain, it's not funny. I'm going to move on. But I agree, they're lulled into complacency. But this is the thing, as I said before, the last leg of the move, the late cycle move, is the most beta. That's where a lot of the beta comes from. It gets so dumb. Are we already in that territory, or can it get even dumber than where we are right now? Especially if you have a Fed that thinks we're at neutral. I don't know that they think we're at neutral so much as they think that the long end of the bond market's going to do their work for them. I don't know. I don't know what the hell. It's, are we just inflating our way out of the debt and trying to hold, like trying to pretend it's not happening as long as possible so we don't get to go to silly, what does Raoul Paul call this? Raoul Paul calls this the banana zone. I think he's got this video out there. He's had a series of videos. He's done his third one, I think, the Everything Code, I think it's what it's called. And he has, between now and 2030, is called the banana zone, where everything just goes dumb to the upside. I don't know. Institutional money can short because they can hold through squeezes. Maybe. I think retail can, depending on the sizing of the position. But I don't think people want to size shorts small enough. People see that potential of that left tail move, and they want to be the next microbrewery, so they put on, positions with massive leverage that pay out these nice convex P&L graphs, and then the market just grinds higher, and you're paying out theta to the market. At best, you're paying out theta. If not, you're in some futures position where you got to keep putting up money to hold it on, and you can't. At Victor sounds like a Pokemon or a lizard. Do I? Jesus. I don't buy the hype, and I personally never have. I don't either, but I'm a cynical person by nature. Thoughts on Ripple? I don't have any. Meaning I don't have any thoughts. I also don't own any XRP. And I don't currently own any ETH. I did, and then I sold it on a rip. Every time I talk to Ryan Grace, though, he talks me into its long-term value, its long-term network value. But I have money in Bitcoin, and that's about it. Cactus Leo, NFT. This is the last one that I'm gonna really get to work here. NFT pictures of rocks and monkeys selling for millions of dollars was pretty dumb. So anything is possible. Exactly, Cactus. It was so funny. Because as we do here, any trader, you guys all have rational, reasonable positions. Why? Because the market's beaten the binary thinking out of us. As soon as you start thinking in one way trains, the market will punish you, and then eventually you get to this world where you see the world through a distribution. Anything can happen, and you approach it with reason, with caution, and with respect. So when the whole NFT craze was going on, people asked me what I thought about it, and I said, well, is a painting worth more when you convert it to dollars? Is it worth more because it's been priced in yen versus being priced in dollars? Somebody would say, well, no, obviously post-conversion, it should be the same. Yeah, okay. Is it worth more if I pay with cashier's checks? The answer is no, it should be the same. Maybe there's some inconvenience fee. It's like, what the hell is this? Traveler's checks is what I used actually. And so the answer is no. So what that shows is the currency unit shouldn't technically affect the value of an art piece, nor should its method of transacting. If I wired you the money, if I paid you in cash, if I paid you with a check, if I paid you with ACH, if I paid you with a theoretical equivalent of diamonds, there's a conversion rate, and there's probably going to be a spread. There's friction on the transaction, but generally speaking, it doesn't change the value of the instrument. So my issue with that whole dumb NFT craze was nobody was judging the art, the value of the art. Everyone was thinking that the scarcity was the thing that matters most. Well, if I blow my nose in a tissue and I put it on a piece of paper, that's scarce. That's a one of one. How much is that worth? How much is that scarcity worth to you? And you start thinking about it like that, you go, well, not very much. Yeah. And that's the way I thought about a lot of those drawings back in the day. That none of them were worth the value that they were selling for. None of them. The art itself. And I'm not even an art person, but if I could look at a dope piece of art, I would say, okay, I get it. I'm not going to pay it, but I get it. Almost none of that stuff, in my personal opinion, was dope. And it was really just an expression of digital wealth. It was like wearing a Rolex or something like that. I don't know. I don't know where you are in your wealth journey, but the more I had, the less I cared about showing it to people. And I was a bank teller at like 18. And here's what I found working at a bank. The people who walk in and look like they got it, being on the other side, 9 times out of 10, they don't got it. The people that walk in smelling like mothballs, they got it. And they have it because they're not trying to keep up with the Joneses and prove it to everybody, because who the hell cares? A t-shirt's a t-shirt, shoe is a shoe, an avatar is an avatar. And that was my opinion then. That's probably still my opinion. I don't know if that's the type of answer you were looking for and asking about XRP and then asking about NFTs, but that's how I think about that stuff. If I can upload a free avatar, is there any chance in hell I'm going to spend $200,000 to put up an avatar and try to impress you? No, thank you. I'm good on my own. I can think of plenty of other things to do with that money. /GC 2704. Somebody brought this up earlier. Down $50, which isn't the worst day. You know, that death candle's $100 in gold. That's why I buy my clothes at Costco. Amen. They have something called cotton on here. I just care about the materials. It took me so damn long. Okay, you got me off of this topic again. It took me so long to care about the materials that I was buying more than the brand. And when I made that transition, I felt like such a fool. You know what I mean? For my entire life to be looking for the thing on the shirt, the thing on the pants, the thing on the shoe, and not caring as much about what's actually in the materials. And then I come to find out I've been wearing stuff made out of oil